House will come to order. Please join Representative Van Beber in the Pledge of Allegiance.
I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Mr. Gregorio, please call the roll.
Representatives Amabile, Bacon, Representative Bacon. Representative Bacon is excused. Baisley, Benavidez, Representative Benavidez. Representative Benavidez is excused. Burnett, Byrd, Bockenfeld, Basenecker, Bradfield, Caraveo, Carver, Catlin, Cutter, Doherty, Duran, Escar, Exum, Froelich, Geithner, Representative Geithner. Representative Geithner is excused. Gonzalez Gutierrez. Representative Gonzalez Gutierrez is excused. Gray. Representative Gray. Representative Gray is excused. Hanks. Herod. Representative Herod. Holtorf. Hooten. Jackson.
Here.
Judah.
Here.
Kennedy. Representative Kennedy. Representative Kennedy is excused. Kipp. Larson. Representative Larson. Representative Larson is excused. Lontine. Luck. Lynch. McCluskey. McCormick. McKean. McLaughlin.
Present.
Michelson Janae. Mullica. Neville. Representative Neville. Representative Neville is excused. Ortiz. Pelton. Pico. Ransom. Representative Ransom. Rich. Ricks. Representative Ricks. Representative Ricks is excused. Roberts. Sandridge. Sirota. Snyder. Soper. Representative Soper. Representative Soper is excused. Sullivan. Tipper. Titone. Valdez A. Valdez D. Van Beber. Van Winkle. Representative Van Winkle. Weissman. Will. Williams.
Here.
Woodrow. Represent. Woog. Young. And Mr. Speaker.
With 58 present, 7 excused, we have a quorum. Representative Van Beber. Representative Van Beber. All right, Representative Van Beber.
Thank you, Mr. Speaker. Mr. Speaker, I move the Journal of Monday, May 24th, 2021 be approved as corrected by the Chief Clerk.
Thank you, Representative. You have heard the motion that the journal be approved as corrected by the Chief Clerk. All those in favor say aye. Uh-oh. All those opposed, no. From this vantage point, the ayes clearly have it. The motion is adopted. Announcements and introductions. Representative Herod.
Thank you, Mr. Speaker. Members, we had an appropriations committee this morning, and my announcement is that we will have one tomorrow. Members will make sure that you have the list as soon as we have it, and I'll make sure the ranking member has it as well. But today we had our jokes, and people need to step up their game, but we did have one that was the clear winner, and that goes to Madam Majority Leader. Come on down. There was a close second, but unfortunately, it's been deemed not appropriate for the well.
I heard that one.
Madam Majority Leader.
All right, my joke was, where'd it go? What should a joke have in common with pregnancy? A good delivery.
And because I know that's the best joke she'll ever come up with, we got her present is a whoopee cushion.
All right.
I told you, Rep. Pico, I have a sense of humor somewhere.
Very good. Representative Duran.
Thank you, Mr. Speaker. It is Capitol Choir time, if everyone could come down, and if Representative Ortiz could come down. I know, my dots are bigger than yours.
Red and the polka twins. Twins. The whole thing going. It's so good.
All right, ready? Happy birthday to you. Happy birthday to you. Happy birthday, Representative Ortiz. Happy birthday to you.
Thank you all for that. Any announcements on the wall? None? All right, I'm eager to wait and hear. All right. Seeing no further announcements, the next order of business. Majority Leader Escar. Representative Exum has an announcement. Representative Exum.
Sorry about that. Thank you, Mr. Speaker. House Transportation and Local Government, we have a busy afternoon. We will hear House Bill 1322, Senate Bill 238, House Bill 1310, Senate Bill 76, and House Bill 1196. LSBA this afternoon at 1:30 or later. So stay tuned.
Oh, there's a lot of more announcements and introductions. Representative Michelson-Jeannet.
Thank you, Mr. Speaker. Public and Behavioral Health and Human Services. We have a packed agenda. We will start at 1:30 sharp. We will hear Senate Bill 18, 25, 27, 154, 239, 158. I will see you at 1:30.
Representative Lantine.
Thank you, Mr. Speaker. Health and Insurance Committee members, guess what? No meeting today. Yay!
All right. Last call. Seeing none. Majority Leader Escar.
Thank you, Mr. Speaker. I move to proceed out of order for the consideration of third reading of bills.
Seeing no objection, we will proceed out of order for consideration of third reading of bills. Mr. Gregorio, please read the title of the House Bill 1311.
House Bill 1311 by Representatives Sirota and Weissman, also Senators Hansen and Moreno, concerning income tax and in connection therewith requiring additions to Colorado taxable income and amounts related to limiting certain federal itemized deductions extending the limit on the federal deduction allowed under Section 199A of the Internal Revenue Code, limiting the deduction for contributions made to 529 plans, disallowing an enhanced federal deduction for food and beverage expenses at restaurants, and limiting the capital gain subtraction allowing a subtraction from Colorado taxable income in amounts related to repealing the cap on the deduction for certain Social Security income, reducing state income tax revenue by increasing the earned income tax credit, funding the child tax credit, and allowing a temporary income tax credit for a business equal to a percentage of the conversion cost to convert the business to a worker-owned co-op, an employee stock ownership plan, or an employee ownership trust, increasing state income tax revenue by modifying the computation of the corporate income tax receipts factor to make it more congruent with combined reporting, preventing corporations from using tax shelters in foreign jurisdictions for the purpose of tax avoidance, clarifying that certain captive insurance companies are not exempt from income tax, and making an appropriation.
Members, I think we should recognize Representative Mr. Gregorio. It's quite the title, Representative Gregorio. Thanks for your service. Representative Sirota. Oh, actually, you know what? Hold on one sec. Majority Leader Escar. Sorry.
Might be helpful. Thank you, Mr. Speaker. I move House Bill 1311 on third reading, final passage.
Representative Sirota.
Thank you, Mr. Speaker. I request permission to offer a third reading technical amendment.
Yeah, the hiss is in order for that motion. That is a proper motion. Let's have it displayed and then explain why you'd like permission. Representative Sirota.
Thank you, Mr. Speaker. There was an extra "and" in the engrossed bill, as well as the two amendments that we offered to increase the earned income tax credit to 25% of the federal for 3 tax years. One of the times that it was mentioned, it should have read 25, but it read 20. So we're correcting that.
Any other discussion on the motion of permission? Representative Van Winkle.
Thank you, Mr. Speaker. And I believe this bill has some serious flaws in it still. I believe the Senate will pass amendments of their own, so there will be a second chance to do this if this bill were to come back to us.
Any further discussion on the motion to grant permission for a third reading amendment? Seeing none. The question before us is granting permission to offer a third reading amendment. Mr. Gregorio, please open the machine, and members, please proceed to vote. For those participating remotely, Representative Williams, how do you vote?
No.
Representative Williams votes no. Representative Jackson, how do you vote?
Yes.
Representative Jackson votes yes. Representative Judah, how do you vote?
Yes.
Representative Judah votes yes. Representative McLaughlin, how do you vote?
Yes.
Representative McLaughlin votes yes. Please close the machine. With 41 aye votes, 23 no votes, and 1 excused, permission is granted to offer a third reading amendment. Representative Weissman.
Thank you, Mr. Speaker. Thank you, members, for permission. Permission having been granted, we move L38 to 1311. Again, this is brought to us by our drafter. This is just to conform with amendments that we already passed in second reading, just to make sure the bill fits together. This is to put dollars into the pockets of hundreds of thousands of Coloradans by means of the Earned Income Tax Credit. We ask for your support.
Any further discussion? Seeing none, the question before us is the adoption of L038. Mr. Gregorio, please open the machine, and members, please proceed to vote. Representative Williams, how do you vote?
No.
Representative Williams votes no. Representative Jackson, how do you vote?
Yes.
Representative Jackson votes yes. Representative Judah, how do you vote?
Yes.
Representative Judah votes yes. Representative McLaughlin, how do you vote?
Yes.
Representative McLaughlin votes yes. Please close the machine. With 41 aye votes, 23 no votes, and 1 excuse, House Bill 13, the amendment, L0, I have it. L038 is adopted. Majority Leader Escar. Majority Leader Escar.
Thank you, Mr. Speaker. I move House Bill 1311 as amended on third reading and final passage.
Representative Ransom.
Thank you, Mr. Speaker. Folks, I know I talked about this last week when we spent a few minutes debating this bill on second reading, and I just wanted to repeat some of what I said and add a couple more things about how damaging this bill can and will be to businesses and citizens of Colorado that have been doing the right thing, that have been working hard, saving their money, trying hard to get through the pandemic of the last year, but even before that, trying hard to raise their families in our beautiful state. We do have the most beautiful state in the nation, bar none. I will fight anybody that tries to say that Colorado is not the best state in the nation, because it is. That being said, we need to make sure we maintain it. And starting to increase taxes is not the way to accomplish that, and to encourage people to move here and then stay here with their families and raise their families. And we have seen some of the things that this bill would bring, and some of them I understand work and some don't. There are still issues within the digital goods piece. To say that a digital good is tangible personal property, I just don't see how definitions work that way. By definition, it's very difficult to say that a digital good, that a book online or music, is a tangible personal property. Tangible means that you can hold it, that you can touch it, you can feel it, you can carry it, you can do something with it. And we need to have clarity in the tax system. We're talking about modernizing the tax system, but why does modernizing result in these big increases to so many people? And I would posit to say that it should not and does not. We have seen the people of Colorado work very hard to get through the last year, and so many of them are coming out. We've seen it. We saw it in our budget. Our budget rose by almost $4 billion, by $3.8 billion. We really were able to recover, and that is because we still have the main elements of the Taxpayer Bill of Rights in place in our state, meaning that we cannot grow too huge and bigger and bigger and bigger. A government big enough to give you everything you want is also big enough to take away everything you have. And I don't want us to be in the position that we are taxing people to where they absolutely cannot do the things that they want to do: buy a home, send their kids to college, maybe have a car that runs, et cetera, et cetera. We want people and families in Colorado to be able to live with the freedoms that they have worked so hard to attain, and that ever since the founding of our country, we have worked so hard to attain. We, the government, cannot produce wealth. By definition, the government cannot and does not produce wealth. We can spend other people's money. We can generate money to spend by taxing it, by taxing people's incomes and other assets, and then having it to spend. But that does not mean that we are generating wealth. We're just taking somebody else's goods and then redistributing them. That is by definition what government does, and we are not generating wealth by anybody. Please remember, I don't know if any of you remember, it's probably been cancel cultured now, the old fairy tale about the goose with the golden egg that laid golden eggs, but the farmer that was so happy that he got an egg of gold every day from his goose. And guess what? The government's kind of like that. When we receive income taxes and sales taxes and all the multitude of taxes that our constituents and our state then sends to the state for us to turn around and spend, we get that golden egg from the taxpayers, all right? If we get greedy and kill the goose, the farmer tried that. He said, oh, I want all the gold at once. I'm not going to wait and get one egg every day. I want the egg, I want the whole pile of gold now. So he killed the goose. It was a normal goose, and then guess what? Then the eggs went away and he didn't have it anymore. This bill 1311
we are actually heading that direction. If we start chasing people out of the state, if we start disincentivizing people to actually work harder and earn more, we're killing the goose. And honestly, folks, I would say that that is not the direction our state should be going. We really want to be encouraging people to work harder and earn more, not saying, well, if you do work harder and earn more, we're going to be taking more from you. So with that, I urge a no vote on this bill, and I really hope that you will think through what this bill is actually accomplishing by taking money away from the people that work hardest to earn it. So thank you so much for your attention, and thank you, Mr. Speaker, for letting me speak.
Thank you, Representative Ransom. Representative Sirota.
Thank you, Mr. Speaker. Members, this is part 2 of the Tax Fairness for Coloradans package, and it is something that we can all truly be proud of. We are modernizing our tax code so that we can bring the Earned Income Tax Credit and the Child Tax Credit finally to a place where we are supporting hundreds of thousands of Coloradans across the state at a time when they need it most. We know that Coloradans earning low incomes were struggling pre-pandemic, and the pandemic has only exacerbated the economic inequalities in our society. By closing particular tax loopholes and ensuring that everyone pays their fair share, we can make sure that young families are able to afford that emergency that comes up, that are able to afford to feed their kids, to pay their rent, to buy their kids new shoes and new clothes as they grow up. And we can do this by asking those who take an itemized deduction that we impact about 0.4% of taxpayers on itemized deductions, that we're only impacting about 10% of those taking a deduction on 529s. We have a carefully tailored package here to ensure that we are asking everyone to pay their fair share to support our young working families through the Earned Income Tax Credit and the Child Tax Credit, which we know actually pays for itself in the end. These are tax credits that go to working families, and they will put this money right back into our economy. So this is something that you can all feel good about, you can feel proud of. We are bringing fairness to our tax code, and I ask for a yes vote.
Thank you, Representative Sirota. Representative Rich.
Thank you, Mr. Speaker. This morning, I was on a telephone conference call with the Grand Junction Area Chamber of Commerce, and this is not a bill that they're proud of, not one whit. They are concerned about the cap on the 529s, and they are very concerned about the decoupling from the federal tax code. And they have asked that we vote no on this. This is not anything to be proud of. This is going to hurt our businesses, it's going to hurt our families, and I'm asking for a no vote.
Thank you, Representative Rich. Representative Pico.
Thank you, Mr. Speaker. I rise in opposition to this bill, and I want to touch on a couple of things. Fairness and equity have nothing to do with this tax code. Money, the money that is people are looking to tax will move. It isn't going to stay there. The whole economic system is highly dynamic, and when people tinker with the tax code, they're looking, generally speaking, at a static model. The money will go someplace else. When you sit there and tax the money of people to hire other people, you're going to destroy the jobs. All those people you pretend to be caring about are going to lose employment opportunities. They're not going to be better off. They're going to be worse off. Money leaves high tax places and go elsewhere, and it will leave Colorado. This is not theoretical. This is historical. State after state, country after country that implements these kinds of tax measures lose in the end. The people that everybody is concerned about, the people that many of you pretend to care about are going to lose in the end. This is not about fairness and equity. This is about punishing those who employ others. This will fail in the end. It will cost Colorado jobs. It will cost Colorado businesses. And frankly, it's going to cost Colorado state tax revenue. Please vote no.
Representative Larson.
Thank you, Mr. Speaker. Members, I rise in strong opposition to this bill, and I apologize for coming down on third reading, but I did not come and speak on seconds. So the problem with this bill is that I think that this is targeting places that, frankly, were most hit during this recession, and now we are going to further exacerbate the issues. And I think the three biggest line items here we're talking about are charitable deductions, 529 savings account contributions, which is for college and other educational purposes, and indeed, as trivial as it may seem, the deductibility of meals. Members, what was the industry that was most impacted by the COVID-19 shutdown? It's restaurants. We all know this. We all have restaurants in our district. And this tax package, frankly, seems like it is tailored specifically to hit those industries that are already harmed by the shutdown hardest. When we're looking at the limitations on, business expensibility, how is that going to impact the restaurant that depends on businesses to come in and expense meals? How is that going to impact the waiters, the people in the back of the house who rely on that revenue and rely on those tips? Furthermore, when we get to the deductibility of charitable deductions here, yes, admittedly, there are a lot of very wealthy taxpayers that write off their charitable deductions. But this is money that is going to charities. Many of the nonprofits that indeed we, as the General Assembly, put money to rely on these donations. This is, frankly, just going to be a very inefficient way of distributing those dollars to those very organizations. Right now, taxpayers are giving those dollars directly. Sure, we can go ahead and collect them as a state and then allocate them through our appropriations process. We do that all the time. We want to go through and look. But all that this bill is going to do is make this a less efficient process in that regard. And 529 accounts, there's an enormous ability for us to use, for people to use out-of-state accounts. And what this will do...
Representative Larson, hold on one sec. Hey, members, we're still on thirds. Let's just be sensitive to the fact we're in third reading. Representative Larson.
Yep. Thank you, Mr. Speaker. So 529 accounts, what this will do to Colorado's College Invest system and 529 system is that this will further disincentivize people to use our system. And it is very easy for a Colorado family, if they have a relative in another state, to open a 529 account and make contributions across state lines. There are many people that are already doing this. This will further exacerbate it. And frankly, members, 529 accounts, again, are used for educational purposes. These are things that we spend hundreds of millions of dollars as a state supporting. And why would we want to get in between a system that's already working for some families where they're saying, hey, you know what, I don't need to go through the state-run system. We'll set aside our own money. This is a state function that we prop up every year. And we're eliminating that efficiency here. And the last thing that I will get to, and again, this was a big issue with the bill, its predecessor, Bill 1420 last year, is that this is going to create a tremendous amount of additional accounting work for businesses. This is going to make filing state income taxes in this state more difficult, especially for those that have complicated tax filings. This is going to lead to thousands of dollars, if not more, for larger companies in additional compliance cost. So this will be great for the accounting industry. But again, those dollars are going to be deviated from other useful purposes that they could be put to. And in a year like the one we are coming off, I don't think that we should be putting in policies that are going to encourage more administrative burden, that is going to be a vast disincentive to charitable giving, that is going to make it more difficult for families to save for college, and indeed that is going to specifically target the restaurant industry, which was one of our hardest hit in this recession. So members, if we want to get serious about recovering from COVID-19, I can't imagine a better way than to vote no on 1311.
Thank you, Representative Larson. Representative Holtorf.
Thank you, Mr. Speaker. Esteemed colleagues, I rise in opposition to this bill as written. The bill sponsor came up this morning and did say some good things. If the two components she talked about were all that were in this bill, I think everybody in this chamber would vote yes. Earned income tax credits going up, child tax credits, but unfortunately there's a lot more. So, because of the additional more in the bill, I'm unable to find myself representing Eastern Colorado and Southeastern Colorado to stand behind this bill. Now, I did find the revised fiscal note, which I was glad to find, because there are some revisions. Ironically, all the revisions actually make the numbers increase to the detriment of the Colorado taxpayer and the benefit of the state treasury. A couple real concerns I have that I wanted to highlight for Colorado is if you thought your insurance premiums were high, well, this tax bill is going to make them higher. When you put more taxes on insurance, insurance companies are going to have what's called a pass-through, and they will make sure that the insuree bears the burden of those increases, and ergo, your insurance premiums will go up across the state at a time when we want insurance premiums to be lower. We've clamored, we've drafted legislation, we've preached from the highest mountaintop, 14ers, about insurance premiums and how we must have a course correction. But then along comes 1311 and speaks exactly to the opposite. The insurance tax premium is paid by the insurance companies and surplus line brokers, the folks that handle those insurance policies, the latter of which offer policies on behalf of insurance companies not licensed in Colorado. The tax is assessed on policy premiums at a rate of 1% for insurance companies with the regional home office, 2% for licensed insurance companies, and 3% for surplus line brokers. Revenue will be credited to the general fund, except for the portions diverted to the Division of Insurance Tax Fund, Wildfire Emergency Response and Wildfire Preparedness Funds, and the State Reinsurance Program. So I have reservations with that. Unfortunately, I have a few more. Now, my colleague from El Paso County is very astute in saying that that's historically when entities, states, governments, all around the world, in fact, provincial or national, federal, when they start attacking or trying to leverage, is probably a better way to say it, capital gains, then there is a migration. So I'm going to talk a little bit to the capital gains deductions. This provision is expected to increase state revenue by approximately $10 million for for just half a year, over 20 million in the out years. Eliminating the capital gains deduction will increase state taxable income and therefore increase income tax revenue. Pretty simple. If you're a tax collector, that's what you want to do. Tax collectors want to collect tax to fill the treasury. So, unfortunately, those folks are going to find other things to do with their investments in other places, because they are going to seek the capital gains deductions where they can if they're offered in other states through other investment vehicles. Most assuredly, there are already very smart people out there in the financial analysis world and the tax analysis world, accountants, tax lawyers, and such, well educated, who will very quickly find ways to take money out of Colorado. I don't think that's the intention of this 1311, but that will be what happens. So your estimates may be flawed after a year or two when the impact of this truly takes effect and that chicken comes home to roost. I won't go into the 529 accounts. I thought Representative Larson covered that quite well. But I will go into something that he also covered, which is a direct attack on the industries most affected by COVID-19, and this is what I think is heinous. It's unacceptable, and we should not even be considering in any measure doing anything to hurt our restaurants, our bars, and other social gatherings that offer food and beverage in a post-COVID-19 environment. Now, for those of you that are in that industry or aspire to be in that industry, make sure that you understand that they have now, or will now, with this legislation, take a significant amount of market share from you because they don't want to help you. They don't want to help you recover, and it's clear by this type of legislation. Because here's what it says, the business meals deduction. This provision is expected to increase state revenue by approximately $3.5 million. This provision will take effect in the tax year 2022. But we all know that in these industries, business meetings, business discussions, business negotiations, the building of business relationships, prospective clientele. Let's be honest, that all happens in restaurants and bars. Oh, they can still have them, of course, but now they're not going to get that tax deduction, which actually promoted that type of a model. It said, hey, come to these establishments and do your business. Help them. Help them. Give them business, and we'll give you a tax incentive because we want to support those industries. But now here we are, summer of 2021, and we're saying no. We're not going to give that tax deduction. I gave the old story about the pickup back at home.
And Representative Holter, if you have a minute 30.
Thank you. And I won't give that story again. That'd take 10 minutes and 30 seconds. So I'll refuse that story again. But it really does make a difference. The tax code that y'all promulgate in this chamber does make a difference to those people that are out there working every day. You know, they get up in the morning, put their clothes on, they go to work, and they're not thinking about the tax code. They're thinking about working. But here we are on the backside just chiseling and whittling away at them, doing things that don't necessarily help them. Now, I will close by this, Mr. Speaker, and I hope I've got at least a minute or two left.
58 seconds.
The good part of this is the earned income tax credit and the child tax credit. If that was all that this was about, helping our families and our kids and our low-income people, you got my vote. Because I'm all about helping the little man. and the little woman and those little families out there struggling to survive. But when you do all this other mess, I have to walk away and say, no, I'm not going to hurt Colorado business, and I'm not going to hurt those folks that are out there trying to make a living every day, that reinvest in Colorado every day. Thank you, Mr. Speaker. Thank you, esteemed colleagues, for your kind attention. May we keep the highest level of decorum in these last 2 weeks as we strive to do the people's work. And God bless America.
I thank you, Representative Holtorf. Representative Hanks.
Thank you, Mr. Speaker. I'm grateful for the chance to come down. And I also wanted to say, Mr. Speaker, you and I were a little late in getting to know one another, just circumstances being what they were. I appreciate the opportunity to talk with you at some length on Saturday. And as a result of those conversations, I have learned and continue to believe it is an honor and privilege to serve with you, sir.
Honor to serve with you, Representative Hanks, and the door is always open. Thank you indeed. Over the course of the last weekend, all members will know this, we developed compromise between both sides of the chamber here, which did include the 3 days of this weekend in exchange for working some bills to their conclusion. We've got guys out on our side, probably on both sides, that need to birth some calves, get the irrigation water going. We intend to honor that, I'm sure, that compromise. In the spirit of that, I did not read this bill, 1311, on second reading. I did suggest that we ought to on third. I will say that I do believe reading these bills is useful to the public at large. I do believe that I'm a little clearer than the machine is because I don't add all the lines and dashes and so forth. However, I've also been told that my voice is starting to bother people like the brakes on a mile-long grain train, so I'm going to limit some of what I read here. But it is important, and let me tell you why. This is called on our board House Bill 21-1311. The title of it is Income Tax. When you pick up the bill itself, which is 36 pages long, the title itself is 29 lines long, and it has 13 sections to summarize in a bill. You know, there was an advertising campaign many years ago that said diamonds are forever. Well, tax laws and income tax changes may not be forever, but they're a real long time. So I think it's in the interest of the people of Colorado to know what's in this, not to get into the pass it to know what's in it euphemism and cliche. So I'd like to do that. I want to read the title. Again, it's 29 lines long, and it is simply this: a bill for an act concerning income tax and in connection therewith requiring additions to Colorado taxable income in amounts related to limiting certain federal itemized deductions, extending the limit on the federal deduction allowed under Section 199A of the Internal Revenue Code, limiting the deduction for contributions made to 529 plans, disallowing an enhanced federal deduction for food and beverage expenses at restaurants, and limiting the capital gains subtraction, allowing a subtraction from Colorado taxable income in amounts related to repealing the cap on the deduction for certain Social Security income, reducing state income tax revenue by increasing the earned income tax credit, funding the child tax credit, and allowing a temporary income tax credit for a business equal to a percentage of the conversion cost to convert the business to a worker-owned co-op, an employee stock ownership plan, or an employee ownership trust, increasing state income tax revenue by modifying the computation of the corporate income tax receipts factor
to make it more congruent with combined reporting, preventing corporations for using, I say again, preventing corporations from using tax shelters in foreign jurisdictions for the purpose of tax avoidance, clarifying that certain captive insurance companies are not exempt from income tax and making an appropriation. There are 13 sections of the bill summary. I'm going to run out of time. We are limited in third reading to 10 minutes at a time per member. I've used half of that. But I want to make the point again, if I may, and then I'm going to ask Matilda, the electronic reader or whatever we're calling it, to pick up from there. But this is not, in my view, a classic waste of time. I have never come up here with the intent of dragging something out. This, to me, is exposing legislation to the people and to the daylight. I will say very briefly, we go through a lot of bills, and it is not easy for us to read. By the time you compile them, it's thousands of pages in 120 days. We end up relying on the expertise of committee members and those we trust to tell us what's in here. I do not think the people of Colorado have the same access and exposure to this. So I pledge to you all, this isn't to burn time. This is to open the discussion and for people to see, especially on third reading now, what this bill is about. And so therefore, Mr. Speaker, with nearly 4 minutes remaining, I might ask and move that the bill be read at length by the electronic device. Thank you, sir.
Thank you, Representative Hanks. That motion is in order. I'm not sure that we've named the voice, but we can talk about that as a body later on, and you might have made some institutional history there. With that, let's have House Bill 1311 read at length.
Bill summary. Note, this summary applies to this bill as introduced and does not reflect any amendments that may be subsequently adopted. If this bill passes third reading in the House of Introduction, a bill summary that applies to the re-engrossed version of this bill will be available at http://leg.colorado.government. Section 2 of the bill modifies how taxable income is determined for individuals for purposes of the state income tax. Specifically, it imposes a cap for taxpayers with adjusted gross incomes equal to or exceeding $400,000 on certain itemized deductions claimed under the Internal Revenue Code. Repeals, for Social Security income that is included in federal taxable income only, the cap on the deduction for pension and annuity income received. Adds a cap, per taxpayer per beneficiary, on the deduction for contributions made to 529 plans. Requires individual taxpayers to add amounts of federal taxable income that are equal to the enhanced federal deductions for food and beverage in a restaurant for the 2022 income year, and extends the limit on the federal deduction allowed under Section 199A of the Internal Revenue Code. Section 3 increases the earned income tax credit to 20% for income tax years commencing on or after January 1, 2022, and applies the -1311 lowered minimum age for individuals without a qualifying child in the Federal American Rescue Plan Act of 2021 to the state credit for income tax years commencing on or after January 1, 2022. Section 4 funds the child tax credit for income tax years commencing on or after January 1, 2022, and allows a child tax credit in the state regardless of the federal requirement that a qualifying child must have a Social Security number for the federal child tax credit. Section 4 also specifies that if the changes to the federal child tax credit in the American Rescue Plan Act of 2021 are no longer in effect, the percentages of the state child tax credit are increased. Sections 5 through 7 make the state's corporate income tax more uniform compared to other states by replacing the current combined reporting standard with the Multi-State Tax Commission standard. In addition, these sections modify the computation of the receipts factor to make it more congruent with the unitary business principle. In addition to making the state's corporate income tax more uniform compared to other states, Section 6 also prevents corporations from using tax shelters in foreign jurisdictions for the purpose of tax avoidance. Section 7 also modifies how taxable income is determined for C corporations for purposes of the state income tax. Specifically, it requires corporate taxpayers to add amounts of federal taxable income that are equal to the enhanced federal deductions for food and beverage in a restaurant for the 2022 income year. Section 8 repeals estate subtraction for certain capital gains incurred. Section 9 creates a temporary income tax credit for a business for a percentage of the conversion costs to convert the business to a worker-owned coup, an employee stock ownership plan, or an employee ownership trust. Sections 10 through 13 address the avoidance of income tax by certain captive insurance companies. 1. Be it enacted by the General Assembly of the State of Colorado. 2. Section 1. Legislative Declaration. 1. The General Assembly 3. Hereby finds and declares that 4a. This act makes certain changes to the state's income tax code. 5. That over the span of several years are revenue neutral, and 6b. The purposes of this act are 7i. To conform Colorado's tax code with provisions commonly 31311. 1 used in other states, so that Colorado is less of an outlier around the country in how taxpayers compute their taxes owed. 2. To reduce tax avoidance by updating provisions of Colorado's 4 tax code concerning certain business structures. And 3. To adjust the availability of certain tax expenditures so that 6. The availability and extent of tax expenditures are more fairly distributed. 7. Across all taxpayers. 8. Section 2. In Colorado Revised Statutes 39-22-104, Amend 9, 304, F, 3, 4, I, 2, and 4, I, 3, and add 3, P, 3, Q, and 10, 4, I, V, as follows, 1139-22-104. Income tax imposed on individuals, estates, and 12 trusts, single rate, report, legislative declaration, definitions, 13 repeal. 3. There shall be added to the federal taxable income, 14, for income tax years commencing on or after January 1st, 2021, 15 but before January 1st, 2023, January 1st, 2026, an amount equal to the 16 deduction allowed under Section 199A of the Internal Revenue Code for a 17 taxpayer who files a single return and whose adjusted gross income is 18 greater than $500,000, and for taxpayers who file a 19 joint return and whose adjusted gross income is greater than $1,020, except that this subsection 3.0 does not apply to a taxpayer 21 who files is required to file a Schedule F, profit or loss from farming, 22 or successor form, as an attachment to a federal income tax return for 23 the tax year in which the taxpayer claims the deduction. 24 allowed under Section 199A of the Internal Revenue Code. 25p. For income tax years commencing on or after January 26, 2022, for taxpayers who claim itemized deductions as defined 27 in Section 63d of the Internal Revenue Code and who have -4 $1,311. 1 federal adjusted gross income in the income tax year equal to or 2 exceeding $400,000. 3i. For a taxpayer who files a single return, the amount for by which the itemized deductions deducted from gross income 5 under Section 63a of the Internal Revenue Code exceed $36,000. And 7.2. For taxpayers who file a joint return, the amount by 8 which the itemized deductions deducted from gross income under 9 Section 63a of the Internal Revenue Code exceed $10,000. 11.qi. For income tax years commencing on or after January 12, 2022, but before January 1, 2023, an amount equal to 13a federal deduction claimed for the income tax year for a food 14 and beverage expense that exceeds 50% of the amount 15 of the expense and that was allowed under Section 274 n 2d 16 of the Internal Revenue Code. 17.2. This subsection 3q is repealed, effective December 1831, 2030. 19.4. There shall be subtracted from federal taxable income 20 F 3a for income tax years commencing on or after January 21, 1989. Amounts subtracted under this paragraph F shall not exceed 22 subsection 4 F are capped at $20,000 per tax year. 23 except that for income tax years commencing on or after January 1, 2024 amounts subtracted under subparagraph I of this paragraph F shall not 25 exceed subsection 4 F I of this section are capped at $26,000 per tax year for any individual who is 65 years of 27age or older at the close of the taxable year. For income tax years -5 $1,311. 1 commencing on or after January 1, 2022, the caps set forth in this 2 subsection 4 F 3a are calculated by first considering the 3 total Social Security benefits a taxpayer received that were 4 included in federal taxable income at the close of the taxable 5 year and only if the total Social Security benefits received that 6 year were included in federal taxable income at the close of the 7 taxable year exceed the caps set forth in this subsection 8 4 F 3a, then the caps are increased to an amount equal to 9 the Social Security benefits received by the taxpayer that were 10 included in federal taxable income at the close of the taxable 11 year. 12b. For the purpose of determining the exclusion subtraction 13 allowed by this paragraph, F, subsection 4, F, in the case of a joint 14 return, Social Security benefits included in federal taxable income shall be 15 apportioned in a ratio of the gross Social Security benefits of each 16 taxpayer to the total gross Social Security benefits of both taxpayers. 17c. For the purposes of this paragraph, F, as used in this 18 subsection 4, F, pensions and annuities means retirement benefits. 19 that are periodic payments attributable to personal services performed by 20 an individual prior to his or her retirement from employment and that 21 arise from an employer-employee relationship, from service in the 22 uniformed services of the United States, or from contributions to a 23 retirement plan which that are deductible for federal income tax. 24 purposes. Pensions and annuities includes distributions from individual 25 retirement arrangements and self-employed retirement accounts to the 26 extent that such distributions are not deemed to be premature distributions. 27 for federal income tax purposes, amounts received from fully matured. -6 1,311. 1. Privately purchased annuities, Social Security benefits, and amounts paid to from any such sources by reason of permanent disability or death of the 3 person entitled to receive the benefits. 4. I.2a. For income tax years commencing on or after January 1, 2001, but before January 1, 2022, an amount equal to all payments 6 or contributions made during the taxable year under an advance payment 7 contract, to a savings trust account, or otherwise in connection with a 8 qualified state tuition program established by College Invest created in 9 Section 23-3.1-203, CRS, or to a qualified state tuition program that is 10 affiliated with an educational institution in the state and that is established 11 and maintained pursuant to Section 529 of the Internal Revenue Code or 12 any successor section. 13. B. Except as provided in subsection 4, I, 2, C, of this 14 section, for income tax years commencing on or after January 15-1, 2022, an amount equal to all payments or contributions, not 16 to exceed $15,000 per taxpayer per beneficiary, 17 made during the taxable year under an advance payment 18 contract, to a savings trust account, or otherwise in 19 connection with a qualified state tuition program established 20 by College Invest created in Section 23-3.1-203, or to a qualified 21 state tuition program that is affiliated with an educational 22 institution in the state and that is established and maintained 23 pursuant to Section 529 of the Internal Revenue Code or any 24 successor section. Notwithstanding subsection 4, I, 3, D, of 25 this section, College Invest may treat a change in beneficiary as 26 a non-qualifying distribution if the change was made for the 27 purpose of evading the limit in this subsection 4, I, 2, B. -7 1,311. 1. C. For income tax years commencing on or after January 1, 2023, the $15,000 limit specified in subsection 3, 4, I, 2, B, of this section is annually adjusted for inflation for each income tax year. For purposes of this subsection 4, I, 2, C, 5. Inflation means the annual percentage change in the United States Department of Labor, Bureau of Labor Statistics, 7. Consumer Price Index for Denver Aurora Lakewood for all 8 items and all urban consumers, or its applicable predecessor or 9 successor index. The Department of Revenue may round the 10 inflation-adjusted limit to the nearest $100. 11. 3. No exclusion shall be subtraction is allowed pursuant to 12 this paragraph, I, subsection 4, I, to the extent that such payments or 13 contributions are excluded from the taxpayer's federal taxable income for 14 the taxable year. Any exclusion subtraction taken under this paragraph. 15. I, shall be subject to recapture subsection 4, I, is added to the 16 account holders' taxable income in the taxable year or years, and 17 which any distribution, refund, or any other withdrawal is made pursuant 18 to an advance payment contract, from a savings trust account, or 19 otherwise in connection with a qualified state tuition program for any 20 reason other than 21, A, to pay qualified higher education expenses, 22, B, as a result of the beneficiary's death or disability, or 23, C, as a result of receiving a scholarship, and as long as the 24 aggregate amount of distributions, refunds, or withdrawals made pursuant 25 to this subparagraph, C, subsection 4, I, 3, C, do not exceed the 26 amount of the scholarship provided during such tax year, or 27, D, as a result of a change in designated beneficiary, if -8 1,311. 1. The change complies with Section 529, C, 3, C, 2, of the Internal Revenue Code. 3. V. Beginning January 1, 2023, and annually thereafter, 4. College Invest shall provide the Department with a secure 5 electronic report containing information for the 529 qualified 6 state tuition programs account owners and third-party 7 contributors necessary for the administration of the deduction aid allowed in this section. The report must include 9. A. The name and social security number, and the 10 contribution amount, of all Colorado taxpayers making a 11 contribution to a College Invest account in the reporting tax 12 year commencing on or after January 1, 2022. 13. B. The name and social security number, and the 14 contribution amount, of any other Colorado taxpayer making 15 a contribution to a College Invest account in the reporting tax 16 year commencing on or after January 1, 2022, who intends to 17. Participate in the deduction allowed in this section, and 18. C. The name and social security number, and the 19 unqualified distribution amount, of each account holder of a 20 College Invest account who is also a Colorado taxpayer making 21 an unqualified distribution in the reporting tax year 22 commencing on or after January 1, 2022, and the reason for the 23 unqualified distribution. 24. Section 3. In Colorado Revised Statutes, 39-22-123.5, amend 25, 2, B, and 2.5, B, and add 2, C, and 2.5, D, and 2.7, as follows, 2639-22-123.5. Earned income tax credit, not a refund of excess 27 state revenues. Trigger, legislative declaration, repeal. 2B, 4-91311. 1. An income tax years commencing on or after January 1st, 2022, but 2 before January 1st, 2023. An income tax years commencing on or 3 after January 1st, 2026. A resident individual who claims an earned 4 income tax credit on the individual's federal tax return is allowed in 5 earned income tax credit against the taxes due under this Article 22 that 6 is equal to 20% of the federal credit that the resident 7 individual claimed on his or her federal tax return for the same tax year. 8. C. I. For income tax years commencing on or after January 9, 2023 but before January 1, 2026, a resident individual 10 who claims an earned income tax credit on the individual's 11 federal tax return is allowed an earned income tax credit 12 against the taxes due under this Article 22 that is equal to 13.25% of the federal credit that the resident 14 individual claimed on his or her federal tax return for the same 15 tax year. 16. 2. This subsection, 2, C, is repealed, effective December 17/31, 2034. 18. 2.5, B, for income tax years commencing on or after January 1st, 2022, but before January 1st, 2023, and income tax years 20 commencing on or after January 1st, 2026, a resident individual is 21 allowed an earned income tax credit against the taxes due under this 22 Article 22 that is equal to 20% of the federal credit that 23 the taxpayer resident individual would have been allowed, but for the 24 fact that the resident individual's spouse, or 125 or more of the resident individual's dependents do not have a Social 26 security number that is valid for employment. 27. D. I. For income tax years commencing on or after. -10-1311. January 1st 2023 but before January 1, 2026, a resident individual 2 is allowed an earned income tax credit against the taxes due 3 under this Article 22 that is equal to 25% of the 4 federal credit that the resident individual would have been 5 allowed, but for the fact that the resident individual, the 6 resident individual's spouse, or 1 or more of the resident 7 individuals' dependents do not have a Social Security number 8 that is valid for employment. 9. 2. This subsection, 2.5, D, I repealed, effective December 10/31, 2034. 11. 2.7, A, for income tax years commencing on or after January 12, 2022 but before January 1, 2023, and income tax years 13 commencing on or after January 1st, 2026, a resident individual is 14 allowed an earned income tax credit against the taxes due 15 under this Article 22 that is equal to 20% of the 16 federal credit that the resident individual would have been. 17 allowed under Section 32, N1, of the Internal Revenue Code. 18 notwithstanding the date limitation set forth in Section 32, N, of 19 the Internal Revenue Code as specified in Section 9621, A, of the 20 American Rescue Plan Act of 2021, Pub.L. 117 to 221, B, I, for income tax years commencing on or after January 22, 2023 but before January 1, 2026, a resident individual 23 is allowed an earned income tax credit against the taxes due 24 under this Article 22 that is equal to 20% of the 25 federal credit that the resident individual would have been 26 allowed under Section 32, N1, of the Internal Revenue Code. 27 notwithstanding the date limitation set forth in Section 32, N-11-1311. 1 of the Internal Revenue Code as specified in Section 9621, A, of 2 the American Rescue Plan Act of 2021, Pub.L. 117 to 232, this subsection, 2.7, B, is repealed effective December 4/31, 2034. 5 Section 4. In Colorado Revised Statutes, 39-22-129, amends 6, 3, A, and 4, and add 3.5, as follows, 739-22-129. Child tax credit, legislative declaration, 8 definitions. 3A, except as provided in subsection 4 of this 9 section, for an income tax year specified in subsection 4 of this section 10 years commencing on or after January 1, 2022, a resident individual 11 who claims a federal child tax credit for an eligible child on the 12 individual's federal tax return is allowed a child tax credit in the amount 13 set forth in subsection 3B or 3C of this section against the 14 income taxes due under this article, Article 22 for the same tax year. 15. 3.5a, except as provided in subsection 4 of this section. 16 for income tax years commencing on or after January 1st, 2022, a. 17 resident individual who could have claimed a federal child tax 18 credit for an eligible child on the individual's federal tax 19 return had Section 24, H. 7 of the Internal Revenue Code not 20 applied to the definition of qualifying child, is allowed a child 21 tax credit in the amount set forth in subsection 3.5 B or 3.5 C. 22 of this section against the income taxes due under this Article 2322 for the same tax year. 24 B I for a resident individual who files a single return. 25. The amount of the credit is equal to 26. A. 30% of the federal child tax credit that 27 the resident individual could have claimed on their federal tax. Dash 12 1311. 1 return for each eligible child, if the individual's federal 2 adjusted gross income is $25,000 or less. 3. B. 15% of the federal child tax credit that 4 the resident individual could have claimed on their federal tax. 5 return for each eligible child, if the individual's federal 6 adjusted gross income is greater than $25,007 but less than or equal to $50,000. And 8. C. 5% of the federal child tax credit that the 9 resident individual could have claimed on their federal tax. 10 return for each eligible child, if the individual's federal 11 adjusted gross income is greater than $50,000. 12 but less than or equal to $75,000. 13. 2. A resident individual who files a single return. And 14 whose federal adjusted gross income is greater than $75,000 is not allowed a credit under 16 this section. 17. C. I. For 2 resident individuals who file a joint return. 18. The amount of the credit is equal to 19. A. 30% of the federal child tax credit that 20 the resident individuals could have claimed on their federal tax. 21 return for each eligible child, if the individual's federal 22 adjusted gross income is $35,000 or less. 23. B. 15% of the federal child tax credit that 24 the resident individuals could have claimed on their federal tax. 25 return for each eligible child, if the individual's federal 26 adjusted gross income is greater than $35,027 but less than or equal to $60,000. N. Dash 13 1311. 1. C. 5% of the federal child tax credit that the 2 resident individuals could have claimed on their federal tax. 3 return for each eligible child, if the individual's federal 4 adjusted gross income is greater than $60,000. 5 but less than or equal to $85,000. 6. 2 resident individuals who file a joint return. And 7 whose federal adjusted gross income is greater than $85,000 are not allowed a credit under this section. 9. 4. No credit is allowed under this section until the United States 10 Congress has enacted the Marketplace Fairness Act of 2013, or any 11 other act with substantially similar requirements, and the General 12 Assembly has enacted a law to implement the minimum simplification 13 requirements in the Congressional Act. The credit allowed under this 14 section may be claimed for any income tax year beginning with the 15 income tax year during which the last prerequisite bill under this 16 subsection 4 becomes law, except that, if the last bill becomes law after October 17th one of a given year, the credit is first available in the next income 18 tax year, and in no case may the credit be claimed prior to the 2014-19 income tax year. In any income tax year commencing on or after January 20th 1, 2022, if the changes specified in Section 9611 of the 21 American Rescue Plan Act of 2021, Hub.L. 117-2, are no longer 22 applicable to the federal child tax credit allowed in Section 2423 of the Internal Revenue Code, then the amount of the child tax 24 credit allowed in this section is as follows. 25. A. I. For a resident individual who files a single return. 26. The amount of the credit is equal to 27. A. 60% of the federal child tax credit that the Dash 14 1311. 1 resident individual claimed or could have claimed on their 2 federal tax return for each eligible child, if the individual's 3 federal adjusted gross income is $25,000 for or less. 5. B. 30% of the federal child tax credit that 6 the resident individual claimed or could have claimed on their 7 federal tax return for each eligible child, if the individual's 8 federal adjusted gross income is greater than $29,000 but less than or equal to $50,010. And 11. C. 10% of the federal child tax credit that the 12 resident individual claimed or could have claimed on their 13 federal tax return for each eligible child, if the individual's 14 federal adjusted gross income is greater than $50,015 but less than or equal to $75,016. 17. 2. A resident individual who files a single return. And 18 whose federal adjusted gross income is greater than $75,000 is not allowed a credit under 20 this section. 21. B. I. For 2 resident individuals who file a joint return. 22. The amount of the credit is equal to 23. A. 60% of the federal child tax credit that the 24 resident individuals claimed or could have claimed on their 25 federal tax return for each eligible child, if the individual's 26 federal adjusted gross income is $35,000 27 or less. Dash 15 1311. 1. B. 30% of the federal child tax credit that 2 the resident individuals claimed or could have claimed on their 3 federal tax return for each eligible child, if the individual's 4 federal adjusted gross income is greater than $35,000 but less than or equal to $60,006. And 7. C. 10% of the federal child tax credit that the 8 resident individuals claimed or could have claimed on their 9 federal tax return for each eligible child, if the individual's 10 federal adjusted gross income is greater than $60,011 but less than or equal to $85,000. 12. 2 resident individuals who file a joint return. And 13 whose federal adjusted gross income is greater than $14,000 are not allowed a credit under this section. 1516 Section 5. In Colorado Revised Statutes, 39-22-303, amend 17, 8, 11, C, 2, and 12, as follows. 1839-22-303, dividends in a combined report, foreign source. 19 income, affiliated groups, definitions. 8a, except as provided in 20 subsection 8b of this section, neither the taxpayer nor the 21 executive director shall include in a combined report any C corporation 22 which that conducts business outside the United States if 80% 23 or more of the C corporation's property and payroll, as determined by 24 factoring pursuant to section 24-60-1301, is assigned to locations outside 25 the United States. For the purpose of this subsection, 8, United States 26 is restricted to the 50 states and the District of Columbia. 27b, for tax years beginning on or after January 1st, 2022. 161311. 1A taxpayer shall include in the combined group any member of an 2 affiliated group of C corporations that is incorporated in a 3 foreign jurisdiction for the purpose of tax avoidance. 2. A C corporation is presumptively incorporated in a 5 foreign jurisdiction for the purpose of tax avoidance if it is 6 incorporated in a listed jurisdiction. A C corporation is not 7 incorporated in a foreign jurisdiction for the purpose of tax aid avoidance if the taxpayer proves to the satisfaction of the 9 executive director that such corporation is incorporated in a 10 listed jurisdiction for reasons that meet the economic substance 11 doctrine described in section 7701(o) of the Internal Revenue 12 Code. 13.3. For purposes of this subsection, 8b, the term C14 corporation includes any business entity defined as a 15 corporation under the Internal Revenue Code and the Rules 16 and regulations promulgated pursuant thereto, regardless of 17. Whether such entity is subject to federal income tax. Any 18. Business entity included in a combined group under subsection 19, 8b, of this section is deemed to be a C corporation for 20 purposes of this Article 22, notwithstanding section 39-22-10321, 2.5. 2223, 11, C. If an affiliated C corporation is included in a combined 24 report section 39-22-303.5, 39-22-303.6, or 39-22-303.7 shall be applied 25 with the following modifications. 26, 2a, for income tax years commencing before January 27, 2022, the numerator of the apportionment calculation set forth in -17-1311. 1 Section 39-22-303.5 or 39-22-303.6 shall be, to the extent applicable, the two sum of the sales of those affiliated C corporations doing business in 3 Colorado. 4b, for income tax years commencing on or after January 1, 2022, the combined group apportionment factor is a fraction 6 determined under Section 39-22-303.6, as modified, if applicable, 7 by Section 39-22-303.7, where the numerator of the factor 8 includes amounts sourced to the state, regardless of the 9 separate entity to which those factors may be attributed, and 10 the denominator of the factor includes amounts associated with 11 the combined group's business wherever located. 12, as used in subsections 10 and 11 of this section. The term 13 as used in this section, unless the context otherwise requires. 14a, affiliated group means 15, one or more chains of includable C corporations connected 16 directly or indirectly through stock ownership with a common parent. 17 C corporation which that is an includable C corporation if 18. A. Stock possessing more than 50% of the voting 19 power of all classes of stock and more than 50% of each class of 20 the non-voting stock of each of the includable C corporations, except the 21 common parent C corporation, is owned directly or indirectly by 122 or more of the other includable C corporations, and 23. 2b. The common parent C corporation owns directly or 24 indirectly stock possessing more than 50% of the voting power 25 of all classes of stock and more than 50% of each class of the 26 non-voting stock of at least one of the other includable C corporations. 27b(2), as used in this subsection. 12, subsection 12a, they -18-1311. One term stock does not include non-voting stock which that is limited and 2 preferred as to dividends, employer securities, within the meaning of 3 Section 409(1) of the Internal Revenue Code, while such securities are held for under a tax credit employee stock ownership plan, or qualifying employer 5 securities, within the meaning of Section 4975(e)(8) of the Internal 6 Revenue Code, while such securities are held under an employee stock 7 ownership plan which meets the requirements of Section 4975(e)(7) of the 8 Internal Revenue Code. 910. B. Listed jurisdiction means Andorra, Anguilla, 11 Antigua and Barbuda, Aruba, the Bahamas, Bahrain, Barbados, 12 Belize, Bermuda, Bonaire, British Virgin Islands, Cayman, 13 Islands, Cook Islands, Curacao, Cyprus, Dominica, Gibraltar, 14 Grenada, Guernsey, Sarcalderne, Isle of Man, Jersey, Liberia, 15 Liechtenstein, Luxembourg, Malta, Marshall Islands, 16 Mauritius, Monaco, Montserrat, Nauru, Niue, Panama, Saba, 17 Samoa, San Marino, Seychelles, St. Eustatius, St. Martin, St. 18 Kitts and Nevis, St. Lucia, St. Vincent and the Grenadines, Turks 19, and Caicos Islands, U.S. Virgin Islands, and Vanuatu. 2021 Section 6. In Colorado Revised Statutes 39-22-304, amend 22, 1, and 3J, and add 2J and 3P as follows. 2339-22-304. Net income of corporation, Legislative Declaration 24, definitions, repeal. 1A. The net income of a C corporation means 25 the C corporation's federal taxable income, as defined in the Internal 26 Revenue Code, for the taxable year, with the modifications specified in this 27 section. 19-1311. 1B. I. For income tax years commencing on or after January 2nd, 1, 2022, in the case of a C corporation that is not 3 incorporated in the United States, or included in a consolidated 4 federal corporate income tax return. Federal taxable income 5 means the C corporation's income or loss as determined from a 6 profit and loss statement prepared for that C corporation on a 7 separate entity basis in the currency in which its books of 8 account are regularly maintained, provided this profit and loss 9 statement is subject to an independent audit, adjusted to 10 conform to the accounting principles generally accepted in the 11 United States for the preparation of such statements, and 12 further modified to take into account any book tax adjustments 13 necessary to reflect federal and state tax law. Income or loss 14 so computed includes all income wherever derived and is not 15 limited to items of income from sources within the United States. 16 or effectively connected income within the meaning of the 17 Internal Revenue Code. Items of income, expense, gain, or loss. 18 and related apportionment factors that are denominated in a 19 foreign currency must also be translated into United States $20 on a reasonable basis consistently applied year to year. 21 and entity by entity. Unrealized foreign currency gains and 22 losses are not recognized. Income apportioned to this state is to 23 be expressed in United States dollars. 24, 2, in lieu of the procedures set forth in subsection 25, 1, b, I, of this section, or in any case where it is necessary to 26 fairly and consistently reflect the income or loss and 27 apportionment factors of foreign operations included in a 21,311. 1 combined report, the executive director may provide for other 2 procedures to reasonably approximate the income or loss and 3 apportionment factors of members with foreign operations. 4, 2, there shall be added to federal taxable income, 5, J.I., for income tax years commencing on or after January 6, 1, 2022, but before January 1, 2023, an amount equal to 7A federal deduction claimed for the income tax year for a food, 8, and beverage expense that exceeds 50% of the amount 9 of the expense and that was allowed under Section 274, N, 2D, 10 of the Internal Revenue Code. 11, 2, this subsection, 2, J, is repealed, effective December 12/31, 2030. 13, 3, there shall be subtracted from federal taxable income, 14, J, any amount treated as a Section 78 dividend under Section 7815 of the Internal Revenue Code excluding any amount treated under 16 Section 78 as a dividend received from a C corporation. 17, incorporated in a foreign jurisdiction for the purpose of tax. 18, avoidance pursuant to Section 39-22-303, 8, B, 2, 19. P.I. Any amount included in federal taxable income 20 pursuant to Section 951A of the Internal Revenue Code with 21 respect to a controlled foreign corporation that is a C-22 corporation incorporated in a foreign jurisdiction for the 23 purpose of tax avoidance pursuant to Section 39-22-303, 8, B, 2, 24 and 25, 2, the amount of any global intangible low-taxed 26 income included in federal taxable income pursuant to Section 27951A of the Internal Revenue Code with respect to a 21,311. 1 controlled foreign corporation that is a C corporation 2 incorporated in a foreign jurisdiction for the purpose of tax 3 avoidance pursuant to Section 39-22-303, 8, B, 2, less any 4 amount deducted under Section 250A, 1, B, of the Internal 5 Revenue Code with respect to such global intangible low-taxed 6 income. 7 Section 7. In Colorado Revised Statutes 39-22-518, 8 amend 2A, I, 2, B, I, B.5, and 2, B, 2, introductory portion, and 9 add 2A, I.5, 2, B, I, B.7, and 2, B, 2, C, as follows, 1039-22-518. Tax modification for net capital gains, definitions 11, repeal. 2. For the purposes of this section, 12A, I, qualified taxpayer for income tax years commencing 13 before January 1, 2022, means any taxpayer with no overdue state tax 14 liabilities and not in default on any contractual obligations owed to the 15 state or to any local government within Colorado at the time the 16 modification created under this section is claimed. This subsection 17, 2, A, I, is repealed. effective December 31st, 2030. 18. I.5. Qualified taxpayer means, for income tax years 19 commencing on or after January 1st, 2022, any taxpayer that has 20 no overdue state tax liabilities, that is not in default on any 21 contractual obligations owed to the state or to any local 22 government within Colorado at the time the modification 23 created under this section is claimed, and that is required to file 24A Schedule F, profit or loss from farming, or successor form, as 25 an attachment to the taxpayer's federal income tax return for 26 the tax year in which the net capital gains arise. 27. B.I. Qualifying gains receiving capital treatment means they dash 22
Representative Hanks.
1,311. One amount of net capital gain.
Thank you. Thank you, Mr. Speaker. I have a couple minutes left. I
think you have to,
I find
I think you have to remove to withdraw your motion, have it read at length, and then you can proceed with your time.
Thank you, Mr. Speaker. I do move to withdraw having this bill read at length on third reading.
And I think I'll make sure we'll add a minute, so you have, we'll just go, you have 5 minutes left.
I'll be quicker than that, sir. I think this is useful. I do not think the machine does it justice. I wish I had the time to read it myself. I know I do not. I think for the people of Colorado, it does make sense for these bills to be heard or read. And so to that end, I'd remind anybody listening that this bill is House Bill 21-1311, can be found on the web at http://leg.colorado.gov. Also, just a simple search engine search of Colorado House Bill 21-1311 will probably get you that. My point here is I wanted to read it. I'd rather read it myself. I don't find that as helpful as I wish it could be. I want the people to see this. In the interest of time, and being a little conciliatory here, I think we left about 18 or 20 pages undone. I'd encourage the voters to take a look at this. This bill is likely to pass despite the best efforts of my caucus. We simply do not have the numbers. It's inevitable. So this is part of your life now, Colorado. I would, or soon to be, I would ask you to take a look at it. And thank you for indulging me on that. Thank you, Mr. Speaker.
Thank you, Representative Hanks and Representative Bockenfeld.
Thank you, Mr. Speaker. It's an honor to serve with you.
Honor to serve with you too, Representative Bockenfeld.
I have a few words here that involve some quotes. They're not mine. I stole them. But I think they're important to mention today. If it moves, tax it. If it keeps moving, regulate it. And if it stops moving, subsidize it. Simple fairness dictates that government must not raise taxes on families and businesses who are struggling to pay their bills. You can't be for big government, big taxes, and big bureaucracy and still be for the little guy. Government does not solve problems. It subsidizes it. Whenever we lower tax rates, our entire state is better off. Members, raising taxes is not helping the people you are trying to serve. It's hurting the most vulnerable communities that you serve. When I was on the outside of this Capitol looking in, people used to laugh and say, "No one is safe while the legislature is in session." Oh, how true that is today. We have an aging population, and the younger folks in our society are carrying more and more of the burden to manage this population. You have to wonder, where is the breaking point? Is House Bill 1311 the straw that breaks the proverbial camel's back? Maybe. I ask for a no vote on this bill.
Thank you, Representative Bockenfeld. Representative Van Winkle.
Thank you, Mr. Speaker. I was shy about coming up because that was a very good closing argument. Thank you, Representative. I also want to add my 2 cents that this should be a no vote. There are 1 or 2 pieces of the bill I actually very much like, but they are far outweighed by the damaging effects that I believe it will have on the people of Colorado. I think it's hitting the people of Colorado as, and the capital gains portion, hitting as Coloradans are trying to save for retirement, hitting parents and families and students as they're trying to save for their 529 college investments. And again, there are many years that families won't be able to contribute to their 529 college savings accounts, but there are many years that they can use to make up for that. And so taxing just a flat cap on it, it doesn't take that into account. It also doesn't take into account that 90% of college invest funds come back into Colorado at one of our universities, trade schools, or community colleges. Right now, the people of Colorado, they're struggling when they fill up their vehicle. They're struggling when they buy their groceries. Groceries have gone up exponentially. Well, gone up dramatically, I should say, not exponentially. In the past, actually, just year and a half, it's incredible how much groceries have gone up, as has the price of gas and other things. So families right now are struggling with the price of everything in Colorado, whether it be from trying to construct their first home and the price of lumber, to paying their rent, to paying their mortgage, to paying their property taxes, which have gone up dramatically too. The middle class is getting squeezed, and I think this bill just essentially doubles down on that. It makes it harder for many people in Colorado, so I ask for a no vote.
Thank you, Representative Van Winkle. Representative Sandridge.
Thank you, Mr. Speaker. So I stand in opposition to this bill for actually many reasons. I'm concerned about how this bill will hurt the job maker. And because I still sit back, evaluate the bill, and struggle with how do you produce more jobs? Because we're recovering from a pandemic. We need to increase our employment. But how do you encourage the job maker to make more jobs by hurting the job maker? And if you look throughout history, and if you look in the modern era in different countries, it's well known that the more pressure, the more regulation you put on people, you deter them from producing and taking risk. The more you tax the profits from a risk, the more you deter them from taking risk in the economy by investing or making a business. Because there's always people out there who have money to open a business or invest in the stock market that are second guessing, should I do this? Should I open this business? Is the climate in Colorado business friendly? Also, you have people who sit back and look at how am I going to find a job? And is this bill going to help me find a job? A quality job. If I'm looking for a job in a certain industry, not a low-paying job, a great job in a certain industry, will this bill help attract people to this state, attract companies to this state that will bring those jobs here? And we all know what the answer is. So we're suffering through a pandemic. We're suffering through a down economy. And this bill is like a lot of other bills that is asking more from the producer, asking more from the taxpayer, asking more from the job maker, putting more pressure on them during a down economy. And there's two things that's going to happen. They're going to finally break. And when they break, the jobs will go down with them. Or they'll move to a different state that is more business friendly, and they'll take their jobs with them. Basic Economy 101. So when we say that this bill may give somebody a tax credit that's deserving, I'm okay with that. But on the same end, they may lose their job for that tax credit. And if you ask them, is that worth it? I think we already know what the answer is. I wish we could look at a bill like this and say, hey, if we want to generate tax revenue for certain tax credits, that we cut off regulation, lower taxes, and allow the free market to prosper. Attract businesses to our state. Attract those jobs. Allow people to have larger paychecks. Then they'll spend more money supporting our local businesses. We'll get more tax revenue, more sales tax. But that's not what this bill does. This bill just keeps on loading more pressure onto the job producer. And it's going to have significant effects on our economy, on people saving for college, on people thinking about investing in the stock market, and looking at capital gains and going, is the risk worth the reward? And when I say the stock market, I'm talking about people's retirement. Is the risk worth the reward for me to invest in these companies? So I wish that we could all continue the debate on basic economics, history on how this type of policy has routinely failed our most vulnerable. And I'll agree with some things that have been said from the people in support of this bill. The rich people will be able to get through it a lot better than the poor people. So at the end of the day, the most vulnerable will be hurt the most. So when the CEO won't be losing his or her job, the stalker is going to be losing their job. The cashier will be losing their job. The person who has suffered through this pandemic will be losing their job. This bill is an example of the way when we look at something and we wish the way it really was, but it's really not. When we look at a situation and we hope that it's a certain way, that this bill will result in positive things, but then reality hits. Just because we stand up here and say this is to help people doesn't always mean it's going to happen that way. I hope people will think about how this will affect their communities, the poor people in their area, and turn away from their wish that this will result in something positive and turn towards the facts and reality and understand how this will hurt our people. So I ask for a no vote. Thank you.
Thank you, Representative Sandridge. The question before us is the adoption of House Bill 1311 on third, as amended, on third reading and final passage. Seeing no further discussion, Mr. Gregorio, please open the machine, and members, please proceed to vote. For those participating online, Representative Williams, how do you vote? I'm not sure you can actually pass, but you know what? You can. Representative Neville, how do you vote?
No.
Representative Neville votes no. Representative Jackson, how do you vote?
Yes.
Representative Jackson votes yes. Representative Judah, how do you vote? Representative McLaughlin, how do you vote?
Yes.
Representative McLaughlin votes yes. Representative Williams, how do you vote?
No.
Representative Williams votes no. Representative Judah, how do you vote? Representative Judah is excused.
No.
Representative Judah, was that you?
Yes.
Okay.
Sorry. No.
Representative Judah votes no.
I'm sorry.
Go ahead, the machine's still open.
I'm so sorry. I got flipped. Yes, and it's me.
Okay. The question before us is the adoption of House Bill 1311 as amended. Representative Judah votes yes. Please close the machine. With 41 aye votes, 24 no votes, and 0 excused, House Bill 1311 is passed as amended. Co-sponsors. Representative Judah, co-sponsor. Representative Jackson, co-sponsor. Please close the machine. Majority Leader Esker. Oh, Mr. Gregorio, please read the title of House Bill 1209.
House Bill 1209 by Representatives Gonzalez Gutierrez and Doherty, also Senator Lee, concerning offenders who committed an offense when under 21 years of age and in connection therewith making an appropriation.
Majority Leader Esker.
Thank you, Mr. Speaker. I move House Bill 1209 on third reading, final passage.
The question before us is the Representative Soper.
Thank you, Mr. Speaker. Members, I came down here. I was unable to speak against the bill on second reading, and I wanted to be able to do so here today on third reading. This bill is one that's not only of great concern to me, but I've had a number of constituents who've reached out. What's being done in this bill is it's expanding the JCAP program to 18, 19, and 20-year-olds to be able to effectively allow juveniles who committed murder or multiple murder to have a pathway to parole faster. I'm of great concern to expand this. The program was set up several years ago, and we should, first of all, allow the program to play out to see if it's effective or not. Because if we truly care about reducing the recidivism rate, we also want to be sure that it's working before we start expanding the program. One of the things that came up as far as the individuals that are involved, the 9 inaugural inmates, I do want to go through who they are because I think it's really good to put a face to the individuals that we're passing specific legislation for. Eric Davis committed first-degree murder. He's serving a 34-year sentence. 17 years per murder. Valencia, first-degree murder, serving 32 years. Andrew Salas, second-degree murder, serving 26 years, 13 years per murder victim. Vincent Rodriguez, first-degree murder and second-degree murder, serving 29 years, 7.25 years per murder. Leroy Gardenhire III, first-degree murder and second-degree murder, serving a total of 29 years, or 9.6 years per murder victim. Cullen Barnes, second-degree murder, serving 27 years, or 13.5 years per murder victim. Nathan Lucero, first-degree murder and second-degree murder, serving 26 years, or 8.6 years per murder victim. Cheryl Armstrong, second-degree murders, total of 25 years, or 5 years per murder victim. Ellen Sudith, second-degree murder, serving 25 years, or 8.3 years per murder victim. Jerry Martinez, second-degree murder, total of 24 years, or 12 years per murder victim. What this bill will do is it will expand the path for allowing these individuals who committed multiple murders out of prison faster. The rationale behind this that we heard debate on was brain maturity, that someone under the age of 18 did not have a mature enough development to be able to know and understand the crimes that they were committing. We heard throughout a committee hearing, going back and listening to it, that studies show the male brain doesn't fully develop until age 25. I did hear someone joke on the record that perhaps it was much later than 25. I do want to talk just a little bit about what we do know. The University of Pennsylvania Law School published a paper here in which they actually refute that. They're saying that an individual actually does know consequences in terms of whether it's right or wrong to commit murder at an incredibly young age. And to say that an individual doesn't know when they take a gun and at point-blank range shoot someone and shoot someone else, that act is somehow not in their mental cognizance is completely false. 9 out of the 10 in the JCAP program committed multiple murders. 1, as many as 6 different murder victims. And now we want to expand the program to include 18, 19, and 20-year-olds. I do know the original version of the bill sought to expand this all the way up to under 25-year-olds. If we turn to page, bottom of page 11 of the bill, I'll give you all, page 11 of this study. The one thing that's talking about brain development is that there might be a correlation if we're talking about things like military service and being in the theater of battle and PTSD when you come back home. But certainly to have your standard be just an age, purely an age, without anything else tied to that, completely lacks what the science is telling us and lacks what researchers have said over and over again. One of my constituents wrote me and said, "It's disheartening to see that some lives are taken with as little as 5 years prison time per victim." Other convictions include aggravated theft, first-degree criminal trespassing, possession of contraband, first-degree assault, kidnapping, first and second degree, aggravated robbery, aggravated motor vehicle theft. Members, these are not light crimes. These are serious crimes in which the perpetrators know exactly what they're doing. Aggravated motor vehicle theft is not just going for a joyride because you see a nice car and you jump in and you can't stop yourself and take it. There's more to it than that. My point is these are, going to be middle-aged men, a lot of them. There's a couple of females included. But they're now on the hardened criminal path with very serious crimes. Yes, I believe in second chances. Yes, I want to give them a second chance. But when our system has said that they should, they committed a crime under a current standard. And if we look at it as a contract, they violated the terms of the contract at that particular time. They violated the law. And now we're coming back after they're serving this duration and saying, we're going to change the rules, but only for you and only for this specific set of perpetrators. I also worry that we don't have enough data from the current program. Before we start expanding a program like this, we should allow enough time to elapse to see whether or not the 10 perpetrators who are included in the JCAP program are going to be successful. Instead, we've set up a program, and so you have to be in there for at least 3 years. And before this can even play out, we don't even know if they're going to be successful re-entering society or if they're going to offend and be right back in. I mean, one thing that we do know is that murder and correlation with recidivism, there's actually not a lot of research on. And that's mainly because these are really long prison sentences. And by the time the person gets out, we actually really don't know a lot about them. So a point to concede here. But we set up this program, and before the program fully gets to play out, and we actually get to have a period of time to see if what the recidivism rate is going to look like,
You have 50
we're now
seconds,
wanting to expand
Representative
it.
Soper.
Well, thank you, Mr. Speaker. I'll leave members with this one line that came from one of my constituents. She wrote me and said, "Why do convicted killers matter more than victims and their families?" As a matter of fact, I'll read that a second time. Why do convicted killers matter more than victims and their families? Thank you, members, and I would urge a no vote.
Representative Gray.
Thank you, Mr. Speaker, and thank you, members. Did this once last year, and I'm going to do it one more time this year. I think we need to take a little bit more responsibility with how we deal with folks who are 18 to 20 years old in this chamber, because we've passed a good number of pieces of legislation, and we're either taking away their freedoms or we're putting more responsibilities on them, but we're not doing both. There are some situations where we want to say, if you're 18 to 20, for the responsibilities to our society, you are 100% responsible for them. You are an adult. If you commit a crime, you should be treated like an adult. And we have passed, in this General Assembly, also a lot of things saying, we can't trust you to make your own decisions. We're going to take decisions away from you, and we're doing them both at the same time. They're not in the same bill. They're not, we don't talk about it very much, but I just like to come down here every once in a while and say, if you're between the ages of 18 to 20, we celebrate a lot of times where we put more responsibilities on them and we put more consequences on them, and we celebrate times where we remove their liberties. And the reason is they're not here. They're not allowed to serve here. They're not old enough. But those of us who are older than that, those of us who have responsibilities to everybody from 0 to 140, I don't think we have 140-year-olds, but and anywhere in between, but to treat them all fairly. And every time we write a piece of legislation that says, we're putting different consequences for folks who are between 18 to 20, or younger than 21, but older than 18 or older, I think we have a responsibility to be consistent to them and not just to put them in this gray area where we can feel like we're accomplishing things by putting more accountability on them but giving them less liberty and privilege. Thank you.
Representative Luck.
Thank you, Mr. Speaker. During committee, I was persuaded by the rightness of this bill. I too believe in second chances and in asking questions both in the committee room and outside of the committee room. I was assured that this course was the right course. After I made my yes vote, however, I was reached out to by a number of individuals in my constituency. Most notably, one of my 3 DAs laid out for me a series of consequences that I had not seen during the committee hearing. As a result of those remarks and the other communiques that I got from my constituency, I must regrettably now be a no vote. Thank you.
Representative Carver.
Thank you, Mr. Speaker. I rise in opposition to the bill. I talked about this extensively on seconds, and why I am up here on thirds is to address an issue that came up in seconds, which I believe the body does not have complete information. During the debate on seconds, the point was made that even after these individuals complete the 3-year program, that they still have to meet a parole board, and the parole board is going to look at all the facts and circumstances in making the decision whether or not to do the early release. However, there is an aspect of the current program which will then be extended to the 18, 19, and 20-year-olds, which affects the discretion of the parole board in making that decision. If the individual in question successfully completes the 3 years, this is under current program, and then, of course, as it would be extended under this bill. If they successfully complete the 3-year program, it creates a presumption, a statutory presumption, that the offender, and I'm reading from the current statute, that the offender has met the factual burden of presenting extraordinary mitigating circumstances, which is a key factor for parole, early parole, and the offender's release to early parole is compatible with the safety and welfare of society. So, members, it's not just that they've completed these 3 years and then the parole board has full discretion on what to do. The statutory presumptions that are created and put in place act to meet the offender's burden in showing that he or she is worthy of parole. And the statute also says, unless rebutted by relevant evidence. So you start out with a rebuttable presumption operating on the offender's behalf based upon completion of the program, that the parole board is to make those findings, which then results in early release, unless rebutted by other evidence. So this, and again, when we are talking 1 year's data, colleagues, 1 year's data that we have currently with juveniles to know whether this program is actually using the right screening criteria and if this 3-year program is successful. We are talking about people who have committed murder. And we are giving them a path to early release. And we do not yet know if this program works. And yet now we are going to expand it considerably to those committing first-degree murder as well as lesser felonies, F1, F2, F3, on down, for 18, 19, and 20-year-olds. We are doing a huge expansion of a program that we do not know if it works. And so I wanted to make the members aware of that additional aspect of the current law and how it impacts the probability of these folks, in fact, getting early release. I ask for a no vote.
Representative Holtorf.
Thank you, Mr. Speaker. Esteemed colleagues, obviously, crime and criminal justice is not just reserved for the urban corridor. It also comes out and touches rural Colorado. So I just want to make a few comments about some problems we have today with this bill, this parole eligibility bill. First of all, the brain development argument, I believe, is a red herring. It doesn't work, and it doesn't wash in the world I come from. Because you see, most people, sometime between the age of 8 and 12, they learn what right is and what wrong is, and they know that killing is bad and murder is wrong, and it's unacceptable in society. In almost every household and community in the world, I think we get that sometime in the early teen years. So I just want to put that on the record. Now, with respect to this, oftentimes when you have an early release, there are follow-on problems that occur. And I'm just going to tell a few stories that I have personal experience with that highlight this point. Being blessed with so many life experiences, both good and bad, which I wish to share with Colorado and this chamber at my own risk. But it highlights this point as we open up our souls and bare them to all. When I was a kid, about 8 years old, even back then, it was really hard to find help in agriculture.
And Representative Holtorf, I'm going to give you some leniency, but let's please try to keep it to House Bill 1209.
Yes, Mr. Speaker, I will do that, and I think this will be very much related to this bill. And if you'll allow me the privilege, I'll try to get to the point here. So we had an individual that was in the Department of Corrections, and they had a program back then in the 70s that said if you go out and you work and you can get a sponsor to sponsor you for a year, that you can get your sentence reduced and your parole, and then you can be released with your parole officer, of course, watching. And my dad, needing help on the ranch, looked into the program and decided to sign up. Well, I remember as a kid getting in the station wagon and we drove to a place called Canyon City. We picked up an individual named Larry. In fact, most of the family went down because we didn't get off the ranch very often. We went in. I went in with my dad. Followed my dad everywhere as a kid, along with another brother of mine. And we picked up Larry and brought him back to the ranch. What a nice man he was as a young boy, well-behaved, hard-working, did everything right that year. Completed the program, and my dad was very happy, but at the end of the program, Dad said, well, Larry, you going to stay on and work the ranch, even though you finished this year? Oh, no, sir, I've got things to do and places to go. Thank you for sponsoring me. My dad said, thank you for all the work you did on the ranch. We appreciated that. Wish you could stay. And Larry moved to Greeley, where he started his new life. And it's a true story. I got a lot of them. Don't have time to tell them all today. Moved to Greeley, got married, and started his new life. And he was so good to us kids and just treated us so well. I thought, what a good man. How would world would this guy get himself in prison and for murder? Oh, by the way, for murder, which I think is to this bill. And actually tried to offer the same thing in a different decade and time 40 years ago that this program here is also trying to offer. With the same intent. Now, the story has a very sad ending. And I'm going to share that emotion with you. Because this man that I, as an 8 or 9-year-old kid, grew to admire and trust. And our family trusted him implicitly. He took us kids to town. If he had to go to town to get supplies, hey, Dad, can I go with Larry? Why, sure, son. Or boy, he called me boy most of the time. Get in a pickup. You can go with him. Boy, that was a treat where I lived, 20, 25 miles from anywhere. And he'd always buy us a candy bar, a little something. Never forget that. But when he went to Greeley and started his new life, within a year, we got a terrible, terrible notice that he had married, but then he had subsequently murdered his new wife and was going back to prison for murder a second time. And as a young 9-year-old boy, I struggled with how could that happen? How could this happen? How could Larry have done that? It didn't make sense to me in my young mind. How a person who had already been in prison, knew the consequences of prison, had come out to rehabilitate, had started a new life, and he'd just given it all away. But here's the worst part of it, and here's where I go to the victim. That poor woman back in that year that married that man and wanted to also start a new life had her life taken. Maybe she didn't know that Larry was a convicted felon, convicted of murder. Maybe she didn't know that Larry had anger management issues that he had suppressed all the time he was under the microscope of his parole officer and others watching. But she made, in her instance, the worst decision of her life. That cost her her life. Now, ironically, the hands of time spin. I think about our life experience with my family and my dad and my mom and Larry and us kids, and even the kitchen table discussions about how could this happen, and my mother trying to explain it to me as a young man, a young boy, I guess, 9 years old, and my other two brothers, all 2 years apart, about 2 years apart, tried to explain to us and give us this explanation. And she's a very Christian woman and tried to found it in biblical terms, in religious terms, and how things are in God's hands and maybe not in ours. But to this day now, we come before Colorado with this bill, and it takes me back in time. And I think about Larry. But I think more about the woman that he married. Maybe he shouldn't have been released from prison. Maybe he shouldn't have been released from prison early. Now I'm going to tell you another story, because I think, how many minutes do I have, Mr. Speaker? Just a couple?
1 minute and 55 seconds.
That's what you said last time, sir, but I believe you. Maybe
10
it was
minutes.
53 seconds. But anyway, time's a wasting, as they say. Another individual told me that, you know, I was sent to prison because I tried to kill somebody and I had every intent of killing them. And I went to prison. And he told me it's a good thing I didn't get out early, because I think I'd have gone and killed somebody again. Because I was mad, and I was immature, and I was against the system, and I was going to get my due. But this person told me in the last 30 seconds I have to talk, and here's what's most important. He said, I'm glad I didn't get out early, because that time in prison allowed me to mature. It allowed people to touch me. Prison ministry. It allowed me to find a better place in my life. And now that I'm out, I don't have to worry about killing people. He says, I know I can do it. He says, I'm not afraid to do it. I hung around a lot of bad people that did it all over in Kansas City. Knows them by name. Some of them never been caught. But you know what? That time and that maturity may be what saved him and saves the lives of others as he lives the rest of his life. And make no mistake, this particular bill does not offer what I've just described in any form if it becomes law. Thank you, Mr. Speaker.
Representative Doherty.
Thank you, Mr. Speaker. First of all, I just wanted to clean up and set the record straight for what this bill actually does. 18, 19, or 20-year-olds who commit a crime have to serve at least 20 years of their sentence before they're even eligible for the program. They have to apply to the program. They have to be accepted into the program. The program is 3 years long, and after that, the parole board decides if they've met the eligibility for the governor to even be able to sign off on their release. There are a lot of hoops involved. It's not easy to get into. There are a lot of people who apply and don't get into the program. And I want to give you a little background on why I think the bill is important. You know, I think we're just a collection of our own experiences and the people that we meet. And that's why we're here, and that's why we decide to fight for the things that we fight for. I have seen the effect. My brother has a felony, and he deals with addiction issues. In his 20s, he had a lot of problems, but my family, through a lot of support, got him through that. He's in his 30s today, and he is not the same person that he was in his 20s. Which is why when I look at this bill, what this does is it strikes a balance between completely giving up on every person who does something wrong and allowing a little bit of hope and redemption. My brother is not in this state, but he's finishing up his probation, and he actually just got hired by the Department of Corrections to mentor other young men who are coming out of prison. Because that's what happens when we give people second chances. Thank you.
Assistant, see no further discussion. The question before us is the adoption of House Bill 1209 on third reading and final passage. Mr. Gregorio, please open the machine, and members, please proceed to vote. For those participating online, Representative Williams, how do you vote?
No.
Representative Williams votes no. Representative Neville, how do you vote?
No.
Representative Neville votes no. Representative Jackson, how do you vote?
Yes.
Representative Jackson votes yes. Representative Judah, how do you vote?
Yes.
Representative Judah votes yes. Representative McLaughlin, how do you vote?
Yes.
Representative McLaughlin votes yes. Representative, please close the machine. With 39 aye votes, 26 no votes, and 0 excuse, House Bill 1209 is adopted. Co-sponsors. Please close the machine. Before we move on, I double-checked. The name of the machine is Zira. So, just wanted to update the chamber that I did a little research between those bills. Majority Leader Escar.
Thank you for that amazing news, Mr. Speaker.
Just happy to contribute.
I move to lay over Senate Bill 38 till tomorrow, May 26th.
Seeing no objection, Senate Bill 38 will be laid over one day. Mr. Gregorio, please read the title of House Bill 1275.
House Bill 1275 by Representatives Lontine and Will, also Senators Janal and Kirkmeyer, concerning reimbursement for pharmacist services under the Medical Assistance Act and in connection therewith making an appropriation.
Majority Leader Escar.
Thank you, Mr. Speaker. I move House Bill 1275 on third reading, final passage.
The question before us, Representative Soper.
Thank you, Mr. Speaker. Members, I was a no vote in committee and just want to explain why. So my reading of the bill, and definitely what we heard in committee, is that it actually seeks to expand the scope of practice for pharmacists and equalize reimbursement rates for those pharmacists in what could be considered more of the practice of medicine. And I was just concerned that we were more utilizing pharmacists to also provide a service that would be more in the realm of a doctor. And that was certainly of concern for me. I have since then visited with the Pharmacists Association and have learned that that's not quite the case. It doesn't actually expand the scope of practice in that direction. These are actually things that pharmacists could already do. It does equalize the reimbursement, though, for those particular different things. So with those assurances, I will be a yes vote, but did just want to let the chamber know where I stood, because I know some of you were probably wondering from committee.
We were. Thank you very much, Representative Soper. Is there any further discussion? Seeing none, the question before us is the adoption of House Bill 1275 on third reading and final passage. Mr. Gregorio, please open the machine, and members, please proceed to vote. Representative Williams, how do you vote?
No.
Representative Williams votes no. Representative Neville, how do you vote?
No.
Representative Neville votes no. Representative Jackson, how do you vote?
Yes.
Representative Jackson votes yes. Representative Judah, how do you vote?
Yes.
Representative Judah votes no. Representative McLaughlin, sorry, gosh, I'm sorry, I got distracted. Representative Judah votes yes. Sorry. Representative McLaughlin, how do you vote?
Yes.
Representative McLaughlin votes yes. Please close the machine. With 57 aye votes, 8 no votes, and 0 excused, House Bill 1275 is adopted. Co-sponsors. Please close the machine. Majority Leader Escar.
Thank you, Mr. Speaker. I move to proceed out of order for the immediate consideration of House Bill 1318 on third reading, final passage.
Seeing no objection, we'll proceed out of order for immediate consideration of House Bill 1318. Mr. Gregorio, please read the title of the House Bill 1318.
House Bill 1318 by Representatives Herod and Ortiz, also Senator Garcia, concerning the creation of the Outdoor Equity Grant Program and in connection therewith funding the grant program from lottery money and making an appropriation.
Majority Leader Escar.
Thank you, Mr. Speaker. I move House Bill 1318 on third reading, final passage.
Motion before us is the adoption of House Bill 1318 on third reading and final passage. Seeing no further discussion, Mr. Gregorio, please open the machine, and members, please proceed to vote. Representative Williams, how do you vote?
No.
Representative Williams votes no. Representative Neville, how do you vote?
No.
Representative Neville votes no. Representative Jackson, how do you vote?
Yes.
Representative Jackson votes yes. Representative Judah, how do you vote?
Yes.
Representative Judah votes yes. Representative McLaughlin, how do you vote?
Yes.
Representative McLaughlin votes yes. Representative Hooton, Representative Holtorf. Please close the machine. With 43 aye votes, 22 no votes, and 0 excused, House Bill 1318 is adopted. Co-sponsors. Representative McLaughlin, co-sponsor. Representative Jackson, co-sponsor. Please close the machine. Majority Leader Escar.
Thank you, Mr. Speaker. I move to proceed out of order for the immediate consideration of House Bill 1314.
Seeing no objection, we'll proceed out of order for immediate consideration of House Bill 1314. Mr. Gregorio, please read the title of the House Bill 1314.
House Bill 1314 by Representatives Harrod and Gray, also Senators Moreno and Rodriguez, concerning the authority of the Department of Revenue to take action against certain documents in connection therewith, making an appropriation.
Majority Leader Escar.
Thank you, Mr. Speaker. I move House Bill 1314 on third reading, final passage.
Question before us is the adoption of House Bill 1314 on third reading, final passage. Seeing no further discussion, Mr. Gregorio, please open the machine, and members, please proceed to vote. Representative Williams, how do you vote?
No.
Representative Williams votes no. Representative Neville, how do you vote?
No.
Representative Neville votes no. Representative Jackson, how do you vote?
Yes.
Representative Jackson votes yes. Representative Judah, how do you vote?
Yes.
Representative Judah votes yes. Representative McLaughlin, how do you vote?
Yes.
Representative McLaughlin votes yes. Representative Benavides, Bockenfeld, Luck, Ricks, Van Winkle. Please close the machine. With 45 aye votes, 20 no votes, and 0 excused, House Bill 1314 is adopted. Co-sponsors. Please close the machine. Mr. Gregorio, please read committee's reports of reference.
Committee on Appropriations, after consideration on the merits, the committee recommends following House Bill 1301 be amended as follows and be so amended and be referred to the committee of the whole with favorable recommendation. House Bill 1317 be amended as follows and be so amended, be referred to the committee of the whole with favorable recommendation. House Bill 1321 be amended as follows and be so amended and be referred to the committee of the whole with favorable recommendation. House Bill 1323 be amended as follows and be so amended and be referred to the committee of the whole with favorable recommendation. Senate Bill 106 be referred to the committee of the whole with favorable recommendation. Senate Bill 156 be referred to the committee of the whole with favorable recommendation. Senate Bill 166 be amended as follows and be so amended and be referred to the committee of the whole with favorable recommendation. Senate Bill 175 be amended as follows and be so amended and be referred to the committee of the whole with favorable recommendation. Senate Bill 185 be amended as follows and be so amended and be referred to the committee of the whole with favorable recommendation. Senate Bill 189 be referred to the committee of the whole with favorable recommendation. Senate Bill 237 be amended as follows and be so amended and be referred to the committee of the whole with favorable recommendation. Committee on Finance, after consideration on the merits, the committee recommends following. Senate Bill 260 be amended as follows and be so amended and be referred to the committee on Appropriations with favorable recommendation. Committee on State, Civic, Military, and Veterans Affairs, after consideration on the merits, the committee recommends following. Senate Bill 256 be referred to the committee of the whole with favorable recommendation.
Majority Leader Escar.
Thank you, Mr. Speaker. I move the following bills be made special orders today, May 25th at 11:21 a.m. House Bill 1286, House Bill 1323, House Bill 1301, House Bill 1306, House Bill 1229, Senate Bill 81, Senate Bill 128, Senate Bill 98, Senate Bill 201, Senate Bill 95, Senate Bill 126, Senate Bill 148, Senate Bill 181.
Seeing no objection, the bills listed by the majority leader will be made special orders at 11:21. Who is in the chair? Representative Bacon.
Mr. Speaker, I move the House resolve itself into the committee of the whole for the consideration of special orders.
Seeing no objection, you have heard the motion. Representative Bacon will take the chair.
good? Yes, we're good. Okay, good job. The committee will come to order. With your unanimous consent, the bills will be read by title unless there is a request for reading a bill at length. Committee reports are printed and in your bill folders. Floor amendments will be shown on the screen and on your iPads. Bills will be laid over upon motion of the majority leader, and the coat rule is relaxed.
I'm just going to be quick.
Members, we are going to pick up where we left off on House Bill 1286. Mr. Gregorio, please read the title to House Bill 1286.
House Bill 1286 by Representatives Kipp and Valdez, also Senators Priola and Pedersen, concerning measures to improve energy efficiency and connection therewith, requiring owners of large buildings to collect and report on energy use benchmarking data and comply with performance standards related to energy and greenhouse gas emissions, and modifying the statutory requirements regarding energy performance contracts.
Representative Valdez.
Thank you, Madam Chair. It's an honor to serve with you.
It's an honor to serve with you.
And I move House Bill 1286.
To the bill.
All right, so we're going to be picking up a conversation that we started yesterday. But before we do, I'd like to really provide a few clarifying comments to the bill and about how, as a business person, which some of you know already, I rent quite a few commercial spaces as a business owner. But this is about large buildings, 50,000 square feet plus, so that's a large building. This bill is really about efficiency, which to a business person means more money. That means I don't have to necessarily lower the rent, but I'm going to make more money, which is a good thing for business. I also think as a businessman, saving with rebates that are currently offered by utility programs is a good idea because that's free money. And everyone likes some free money, right? I know everyone's not really paying attention, but free money is good. Worst case, I decide to remodel my property. I get subsidized parts. I'm making an investment. And for those of us who are business people, the word investment means you're going to make more money at the sale of that asset. You are actually making an investment into it. That brings more income as well. I can raise my rent because I have a better property. Again, more money to me as a business owner. Maybe I'm just lazy and I decide to change the lights in my property. They're subsidized by the utility. I have a smaller electric bill, or as the businessman in me calls it, I'm making more money. Or maybe I'm a business who wants to move to Colorado because my employees really love it here and love the wonderful outdoors. It's a great place to live, but now, as a business, I'm looking at less CAM, which stands for Common Area Maintenance, which means as a business leaser, I am making more money. Every single element of this bill will make business in Colorado stronger, and I say this as somebody who is a business person and who is acutely knowledgeable of all of the things that go into commercial real estate. The other piece that I would like to say is in most little towns in the state of Colorado, your largest building is going to be the local Walmart or Target, right? The greenest company in the world by far is Walmart. Why? They like to make money. They've learned a long time ago wasting money on energy is not going to help them to create good returns for their shareholders. So Walmart's not opposing this bill because they're already there. And so what we're trying to do is just raise the bar across the board, create a roadmap for everybody, and make business better for everybody in Colorado. So I would urge an aye vote, and thank you for your attention today and yesterday and the day before.
Representative Kipp. We had a lot of great conversation about this bill yesterday. It's a great bill. It will ultimately help climate change in Colorado and save money. I urge an aye vote. Thank you. Representative Pico.
Thank you, Madam Chair. Those are great comments. The idea of making sure we save businesses money is something that necessarily the government doesn't need to do. The business owners can figure that out. The programs are already there. What this bill does is mandate specific issues with penalties. You don't need to penalize a company to make them want to make money. And that's one of the fundamental issues that's wrong with this bill. The other issue in it is that the whole point of it, the rationale for it, was written into the legislative declaration in multiple places as this is about fighting climate change. Let's be clear. I don't know of anyone who necessarily disagrees that climate change is happening, has happened in the past, will happen in the future. That's not really the question here. The question is whether this is going to have anything to do with it, or whether the carbon emissions that are being targeted here are going to have anything to do with it, or whether the heat loss from the large buildings are going to have anything to do with it. I worked in business for a couple of decades as well as being in military before that. And I can assure you, as a project manager with multiple projects, I was looking to save money. I didn't need the government to tell me exactly how to do that or tell me they're going to fine me. If I didn't meet financial requirements, I lost the contract, which I never did. The claim is that it's going to save money. Well, again, the businesses don't have to be told how to save the money. Almost every business group, including the contractors who would benefit from the work of rehabilitating these buildings, are against this bill. Why is that? Because it adds penalties. If this was only a benchmarking bill, I don't think you'd have the opposition. But it goes much further than that. So let's talk about the justification for this. It is written in multiple places within the bill. I'll dispense with reading the long stuff. Oh, one second. Here's I'm going to offer an amendment today in a little bit, but first I want to get to why it's here. The justification is said from multiple places within the bill is this is about climate change. I heard during the break that, well, this is really about saving businesses money. No, the justification in multiple places is climate change. And I've said before, the issues of climate change are complex, they're varied, there's a great deal of debate, and what's really at issue is the attribution and what it is. Well, let's talk about what that is. This is talking about here, you want to reduce carbon pollution. That's what's written in the legislative declaration. So how much is this bill going to have as an effect on climate change? Carbon dioxide is 3.5% of the greenhouse gases in the atmosphere. The anthropogenic side, or human-caused portion of that carbon dioxide, again, is 3.5%. 3.5% of 3.5%. That's the percentage of carbon dioxide, human-caused carbon dioxide, that is being attributed as being driving climate change. That's a pretty small number. And when I emphasize something, those numbers are not in dispute. All of the atmospheric physicists and scientists on both sides of this debate about what causes climate change are in agreement with those numbers, 3.5% to 3.5%. So how much is this bill going to have any effect on this? Not much. What's America's portion of that? Well, President Biden let the cat out of the bag not too long ago. He admitted on record that the United States is 15% of the human-caused emissions across the country, and his statement was that whatever the United States does won't matter. Now, that's a brief moment. He slipped up with a moment of clarity there. But as we heard in committee, that's not really the accurate number. It's actually less than that. It's 12.8. We are far outstripped by other countries. Developing countries, China and India together, account for more of the human-caused carbon dioxide in the atmosphere of the rest of the world combined. How much is Colorado of that 12.8%? It's 1.85%. That's what Colorado puts into the air. And the buildings that are the target of this legislation is 2.9%. 2.9% of 1.85% of 12.8% of 3.5% of 3.5%.
Excuse
you run
me,
the numbers on that,
Representative
and that's minimal.
Pico, I'm sorry. Members, Can we keep it down so we can hear our representatives in the well? Thank you.
Thank you, Madam Chair. So 2.9%, of 1.85%, of 12.87%, of 3.5%, of 3.5%. Ladies and gentlemen, that's going to have about as much effect on climate change as a bison flatulence in a Colorado blizzard. It just isn't going to have any effect. And what is the current shift? There's a lot of changes in the climate, whether forest fires or droughts or everything else. And you look back in the historical record, you look back in the climate record, and there's not a single item that hasn't happened before. The National Oceanographic Administration, NOAA, has a site. You can go onto that site. I have had this site bookmarked for quite a long time, and you can see their search results, and they'll put that out, and you can watch it month to month. The temperatures are declining, not rising, and the current temperatures are lower, I emphasize that, than they were at the beginning of the record in 1890. That's scientific. That's your own guys' stuff. So what I would offer, I move Amendment L017 and ask it to be displayed.
Amendment L17 has been moved and displayed. Please proceed.
Thank you, Madam Chair. And what this says, it talks about taking a look at real climate reporting centers. If for any period of time the global lower tropospheric temperature anomaly falls below the 30-year average, or the long-term increase in temperatures is less than a rate of 0.2 of a degree, as measured by the University of Alabama Huntsville of the Remote Sensing Unit. That's satellite reported data, which according to NOAA is the most accurate measure of global temperatures. So if the above is met, then the subsections in here which refer to the penalties is repealed, and if one of the conditions in subsection above of this section is met, a climate mitigation charge of $2 per megawatt hour shall be assessed on the generation and storage of renewable energy. And these funds shall be credited to the Just Transition Cash Fund created in another piece of legislation. Ladies and gentlemen, this puts this right on the thing. If the climate change is happening as has been portrayed, then this, if adopted, this won't go in effect. If it doesn't happen, it does, and we stop penalizing the businesses. This puts on the line. If you believe in this, you ought to be for this. And let me close with a reminder that the attribution is what is in dispute, and the scope and intensity and direction. Are there effects of climate change? Yes. I think we heard a very impassioned accounting of the costs of climate change. But does this have anything to do with that? And the answer is probably not. And you, as I say again, if you look back in the historical record, you look at the ice core data, the ice core data shows that temperatures for 9,000 of the previous 10,000 years have been warmer than the present. And yet we're concerned about a few tenths of a degree rise over several decades of time. If the catastrophic effects of climate change are to be attributed to human-caused, the predictions are a 6 degrees rise over the next 80 years. And as I noted yesterday, that requires an increase of 0.2 of a degree per decade, 3/4 of a degree per decade for the next 80 years. The current rate of increase, as measured by the climate reporting agencies, is 0.14 of a degree per decade. So have the courage of your convictions and vote for this amendment. If it happens as you say, this amendment will have no effect. If it doesn't, we'll stop penalizing our businesses. We'll stop devastating the economic integrity of these United States and this state of Colorado, and we'll save some jobs. Again, we don't need to tell businesses how to save money. They will figure that out themselves. There are multiple programs by the utility companies for saving energy, and I ask for an aye vote. Thank you.
Representative Soper? No? Representative Kipp?
Thank you, members. I ask for a no vote.
Is there any further discussion on Amendment L17? Seeing none, the question before us is the adoption of Amendment L17. All those in favor say aye. Aye. All those opposed say no. No. The amendment fails. To the bill. Assistant Minority Leader Geithner.
Thank you, Madam Chair. And members, I'm here with Representative Soper because we have an amendment that we're about to run. Actually, let me move the amendment and then we can just talk to it. So with that, I move L023 and I ask that it be properly displayed.
Amendment L023 has been moved and properly displayed. Please proceed.
Thank you, Madam Chair. And so members, what L023 does is, as we look at aviation, certainly I think we can all envision what a hangar looks like, and we can understand the purpose of a hangar. And that is, just think of a large, incredibly large garage that opens up. And oftentimes these structures stay open for long periods of time. And so ultimately what L023 does is it would remove the impact of 1286 specifically on the airline hangar or on the aviation facility. And so that's the purpose of L023. I'm certain that Representative Soper has some thoughts as well.
Representative Soper.
Well, thank you, Madam Chair. I also rise in support of this amendment. Well, one thing that we heard in committee was, and apparently we have a hangar now.
This is not the hangar we are speaking of.
Props. Okay.
But it is something you can hang your coat on. But the hangars we're talking about are the ones you can drive your plane into that are found across Colorado at places like DIA, our largest airport, or in small municipal airports like Delta County's airport, or smaller commercial airports like Montrose or Grand Junction. And hangars, can be very big. They are definitely not energy efficient, regardless of if they're heated or unheated, which, by the way, an amendment was added to remove the unheated hangars. But that still doesn't catch up things where your hangar might be heated because in Colorado it's actually cold half the year. And you certainly are going to be wanting those heaters on, but you might also have the doors open. So yes, it will be, by its sheer design, incredibly energy inefficient. And what's also not fair is for an airport up in Fort Collins to have the Diamond 5-star energy-rated hangar, and to now have that benchmarked against a hangar in Delta County or Montrose County or Mesa County. Because our wealth is certainly not that of other parts of the state, and certainly the ability for us to be able to come into any sort of compliance would be incredibly difficult, and it would almost overnight kill the aviation industry, certainly in western Colorado, and I would venture to say in any place where the medium household income is not over at least 400% of poverty. So we certainly have a reason why we're wanting to exempt out aviation, because those are big buildings that certainly have different uses in which they are certainly designed never to be energy efficient because of the doors going open and shut all the time. So I'd ask for a yes vote.
Representative Sandridge.
Thank you, Madam Chair. I stand in support of this amendment. First off, there was an amendment in that was added on previously associated with this bill that focused on aviation. I think it was done in committee. It just didn't go far enough. How I articulate aviation in this bill, if you look at all the different groups that are in this bill, in many ways they're very similar. Aviation is not similar. It's almost like forcing a square peg in a circle hole. It's not associated. It should be cut out. Very similar to the reasoning of why agriculture was cut out. Very similar to how marijuana was cut out. And it's not saying, whether you like the bill or not, it's not saying that aviation should be just forgotten, just like maybe agriculture and marijuana should be forgotten. It should be done in a different bill in the future. So I understand in committee we had these discussions, and there were discussions about different groups being considered down the road in different bills. I think that would be appreciative if we did that to aviation. Also, something associated with the timing, the rural aviation community has been struggling during the COVID outbreak and during the down economy. It would be nice to consider them. Truthfully, it'd be nice not to consider them at all or have them part of this bill at all. But if you are going to do that, it'd be great to do it in the future, possibly when the economy has recovered some. Because aviation is associated with transportation. We don't want to hurt the transportation community in our state, especially during this time. I'm sure the aviation community would be more appreciative, especially in the rural area, if we waited till the economy recovered a little bit before we put this additional strain on them. I think it'd be a smart yes vote, so appreciate the time. Thank you.
Representative Rich.
Thank you, Madam Chair, and I'm here to speak in support of L023. My husband is in general aviation, and he actually has an office in a hangar, like many people who work in general aviation do. And it would be detrimental for hangars to be excluded from this or included in this, because the offices are not that big. It's the hangar itself that holds the airplane that's bigger, but there are offices there. They have businesses in those hangars, and I think it's important to include this in this amendment. I ask for a aye vote.
Representative Kipp. Representative Woog.
Thank you, Madam Chair. Yeah, I mean, I think probably most of us can envision a hangar with a huge garage door opening, letting out a extreme amount of heat. Obviously, you got to think about the maintenance workers. They're going to need a heated hangar. They're doing work on the planes, possibly restoration throughout the year. As was mentioned, mixed use. We got, there's offices and hangars, there's parts rooms, electronics rooms, et cetera. And frankly, the FAA will limit what all buildings and airports can do. They cannot just put up solar panels, of course. And then just one other point, geographically, Centennial Airport was the 8th busiest in the nation, and that's really hard to compare buildings on that airport with, say, like Pagosa Springs or Eagle. So there will be a lot of issues with if we don't, support this amendment. So I urge a yes vote. Thank you.
Representative Holtorf.
Look at that.
Thank you, Madam Chair, esteemed colleagues. I also rise in support of this amendment to this House bill. Aviation, specifically general aviation, including private commercial aviation, and also international public aviation. They probably have some of the largest capacity as far as the square footage that would be subject to this. And as we come back from, once again, a post-COVID-19 recovery, we all know the aviation industry has suffered greatly. Now, I don't know why we are in such a hurry to run all these bills. I don't know why we're in such a hurry to hamstring so many industry sectors who have suffered significant loss, financial loss in the last 12, 14, 15 months. And now we're going to turn right around within a year and bring this to bear on them. I don't know why this particular exclusion couldn't be considered. Even one of the bill sponsors, an aviation trained professional in his career, I would hope could understand how this particular amendment at this time might be warranted, might be relevant. We serve on the aviation caucus together, as many members do that are involved in aviation. And we know how that particular industry also has its own challenges and have been most challenged over the last 14, 15 months. If you're in charter aviation, if you're in commercial aviation, even in agriculture, we have crop dusters. We have a lot of aviation that supports agriculture. They, in turn, fall under the purview of this particular legislation. Not something they need, not something they want at this time, not something they're asking for at this time. Now, if in future time we want to create a stair-step approach, which I think would be more beneficial in this movement, I would welcome that. But this particular amendment here is a targeted amendment that's very thoughtful, that comes out of the part of Colorado that has a significant concentration of aviation, and it's not international companies, but more the companies that serve nationally and within the state in so many capacities. And the hangars that they not only house their aircraft in, but also have all of their offices, their maintenance offices, their business offices, and any other office. So I rise in strong support of this amendment from my colleagues, and I urge an aye vote.
Mr. Minority Leader.
Thank you, Madam Chair. Folks, this was my life. When I was 9 years old, I filled out a little card and sent it off to Beechcraft. And one day, a guy drove in the lane of the farm to apparently talk to me. I didn't know. I was out of the barn, and my dad came and found me, and he said, "Hugh, somebody's here to see you." And it was the Beechcraft salesman. And he was there to sell little Hugh McKean an airplane. Hugh McKean wanted an airplane really badly, but he didn't quite have the checking account to do that at the time. But this has been my life. Since I left high school, I've worked at airports, been involved with aviation one way or the other. This is actually an important amendment, and here's why. Aviation is one of the biggest, most effective, most temporal, that means quick in time, economic drivers that we can have. Back when we had the High Park fire, I was at Staples office supply store getting a couple things I needed, and there was a guy there filling his cart with stuff, and he had on an Erickson Sky Crane hat. And so I asked him if he worked for Erickson. He said, sure enough, he did. And I said, what are you doing? He said, well, we're standing up a little helicopter base here at then Fort Collins Loveland, now Northern Colorado Regional Airport. And we talked about whether or not Erickson would move a maintenance base to Northern Colorado so that we had helicopters on the ground
when we needed them for forest fires. Sort of a remarkable thing. I will tell you this, they considered it. They decided that that was not the time to do that. If we were to not allow exemptions for things like this, that would be the last conversation about that we might ever have. Because to have a hangar to do the maintenance would simply be too much to build in the way that it would be required to be built under this. This is a good amendment, folks. This is a good amendment that says, you know what, we want to make sure that we help business. We want to make sure that we help the state grow. We want to make sure that we do the things we can to make sure it does it in the right way. Vote yes on this amendment.
Is there any further discussion on the amendment? Seeing none. The question before us is the adoption of Amendment L23. All those in favor say aye. Aye. All those opposed say no. No. Sorry. Sorry. The amendment is lost. To the bill. Representative Soper.
Thank you, Madam Chair. I move Amendment L020 and ask that it be properly displayed.
L020 has been moved and properly displayed. Please proceed.
Thank you, Madam Chair. So since the previous amendment was rejected, we did want to have it be a little bit more narrowly tailored to aircraft hangars, and I would ask for a yes vote. Thank you.
Is there any further discussion on Amendment L020? Seeing none, the question before us is the adoption of Amendment L020. All those in favor say aye. Aye. All those opposed say no. No. The amendment is lost. To the bill. Representative Baisley.
Thank you, Madam Chair. So obviously it's always a challenge when the state or any government level begins to impose its will onto private industry and starting to tell them, here's how you ought to operate your business in ways that we think would be superior or preferred. Here in the case of operations of buildings, this is imposition of desire, of outcome by folks here in the state, and this imposes what would naturally come about by businesses who own and operate buildings for the sake of themselves, because they're all after efficiencies. Efficiency means cost savings. Efficiencies mean higher profit margins and better competitive positions. So it's when regulations impose towards efficiencies, then it's an unnatural intervention. And it's a little bit of an arrogance as well for us to be telling industry, here is how you all should perform. Even more so, if we in the state say, hey, private industry, we need for you, in fact, we will mandate that you perform in a specific manner, but we won't comply with that ourselves. We will exempt ourselves in the state. It adds the insult to the injury, and I really object to that portion of this bill. And towards that aim, I move L024 and ask that it be displayed.
L024 has been moved and properly displayed. Please proceed. Representative Baisley.
Thank you, Madam Chair. So in the last couple of pages of the bill, under civil penalties, it reads all of the civil penalties that shall be applied to any buildings that do not come within compliance, and those penalties are up to $2,000 for first violation and subsequent violation, $5,000 for each day that the violation continues, up to 2 cents per square foot of gross floor area of the covered building, except division shall not assess a civil penalty with regard to a building owned by the state, a statutory home rule city, city and county or county, school district, a state institution of higher education, a district or special district. In other words, everybody but us. So what this amendment would do would be to include us as well. Let's stop telling everybody else how they ought to behave and not embrace it ourselves. We either believe in this or we do not. We're either through this bill trying to implement some environmental changes, or we're seeking to punish private industry while exempting ourselves. So I ask for an aye vote, a yes vote on this amendment to include the state within the same penalties as would be applied to every private industry who owns and operates a building.
Is there any further discussion on the amendment? Seeing none, the question before us is the adoption of Amendment L24. All those in favor say aye. Aye. All those opposed say no. No. The amendment is lost to the bill. Representative Will.
Thank you, Madam Chair. It's an honor to serve with you.
It's an honor to serve with you.
So I'd like to move Amendment L021 and ask that it be displayed.
Amendment L021 has been moved and properly displayed. Please proceed.
Thank you, Madam Chair. And so we bring this amendment forward because into the bill under covered buildings that does not include, and in Section B, it's a building is more than half of the gross floor area is used for manufacturing, industrial, agricultural purposes. And so this amendment, what it does is it's for any public or private. It kind of ties into the last amendment, which a public or private entertainment facility in which the design is not solely airtight year-round. And that includes a lot of our rural buildings, and sometimes in the counties, they have indoor roping arenas that are heated in the winter. A lot of these landowners to benefit themselves and try to economically expand have these same kind of facilities. Are used as a barn or maybe equipment storage or whatnot, and then maybe in the summer, early spring into the late fall, they're used as wedding venues. So sometimes the doors are up, they're not airtight, sometimes the doors are down and need to be heated for a few hours or whatever. So that's what this amendment covers, and we're going to make sure all those type of buildings are included in the bill as being exempted from this in the benchmarking.
Representative Soper.
Thank you, Madam Chair. Yeah, so when we were looking at a lot of the rodeo arenas in rural Colorado, a lot of the fair venues, just a lot of the areas like that, what we saw is that this would apply to them, but yet a lot of those would be nonprofit organizations. And even though this bill exempts the government, it still applies to a nonprofit organization. And many of them are barely making it as is because they're providing something that the community rallies around, like a rodeo or your county fair. So being able to exempt this and to allow those to continue, because depending on what time of year it is, there will be very different functions that happen there, and they were never, ever designed to be energy efficient from the get-go. It was really just convenience as far as the entertainment facility is concerned. So we'd ask for a yes vote.
Representative Pelton.
Thank you, Madam Chair. I rise in full support of this amendment. There are several of these type buildings out in my district. Representative Soper talked about nonprofit. Well, a lot of agriculture produces, some years are nonprofit. So, and I've been to several weddings that barns have been converted, and sometimes they're storing equipment, and then all of a sudden they're having a wedding there. So, for those reasons, I am full support of this amendment.
Representative Catlin.
Thank you, Madam Chair. It's an honor to serve with you.
It's an honor to serve with you.
Thank you, ma'am. Members, I'm here to support this amendment for a number of reasons. Out in our area, you could have an onion shed during the fall and the winter, and during the spring and summer, it's an event place. We also have a number of places where individuals put on roping events and these type of things, and it is a covered building. So it seems to me what we're doing is we're reaching out, asking about covered buildings, when in reality we're just talking about a place that's got something to get out from under the sun and run a roping with. I've ran a roping arena that had curtains that we would put down to keep the wind from blowing through it. It wasn't heated, but we did have some space heaters in there so that the ladies that were keeping the scores were able to keep from freezing out. Is that a covered building? Those are the kind of questions we're trying to ask. I know that agriculture is exempted out of this, but this is one of those places where it's not a commercial facility, but it's not completely all ag. This would be a good amendment for individuals that are just now starting to come back up out of not being able to see their neighbors, friends, and relatives, and let them get back to hosting some of these kind of events. This would be a good amendment. Vote yes.
Is there any further discussion on Amendment L021? Seeing none, the question before us is the adoption of Amendment L21. All those in favor say aye. Aye. All those opposed say no. The amendment is lost to the bill. Mr. Minority Leader.
Thank you very much, Madam Chair. Folks, we talked about this a lot yesterday for hours, and today we kind of came back to it in an effort to really try to frame what I think is a good conversation about where we go with some of our big goals. I really want to thank the sponsors for allowing a little bit of time here to come together to say, what can we do? And honestly, part of that outcome was that a piece of this that's tough here will pass out of here but get modified in the Senate, and that's the performance standards piece. Because honestly, there's just too much discussion about what the task force is going to do and what some of those individual pieces and elements of this process look like longer in time. So just thank you. Thank you for that indulgence of time, but also for just allowing folks to come together and really discuss this. Thank you very much.
Is there any further discussion on House Bill 1286? Seeing none, the question before us is the passage of House Bill 1286. All those in favor say aye. Aye. All those opposed say no. No. The ayes have it. House Bill 1286 passes. Mr. Gregorio, please read the title to House Bill 1323.
House Bill 1323 by Representatives Cutter and Amabile, also Senators Van Berg and Rankin, concerning the creation of a Special Olympics license plate for motor vehicles.
Representative Cutter.
Thank you, Madam Chair. It is an honor to serve with you.
It is such an honor to serve with you.
I would like to move House Bill 1323 and the appropriations report.
To the appropriations report.
We were approved for money for this this endeavor, and I ask for your support.
I'm sorry, is there any further discussion on the appropriations report? Seeing none, all those in favor of adoption of the Appropriations Committee report, please say aye. All those opposed say no. The report is adopted to the bill.
Okay.
Representative Cutter.
Thank you, Madam Chair. So last year, I was working with Special Olympics to run a license plate bill and a tax checkoff, preserve their tax checkoff status. And obviously, lots of things got sidelined last year, so we set it aside. They were able to get the tax checkoff preserved through another big bill we amended it into, but I don't know if you know, but you have to, many of you may know this, that you have to get a lot of signatures to support a license plate bill. And so they worked very hard to get support from the community, and those signatures are set to expire in July. So this would be a wonderful thing to raise awareness of Special Olympics Colorado, which is just a phenomenal organization, and also to preserve a funding mechanism for them. And I ask for your support.
Representative Amabile.
Oh, wait. Oh, shoot. We have an amendment we need. Oh, God damn it. No, it's to the bill. It's to the bill. Okay, so we can move it to the bill. Yeah. Okay, thank you.
Apologies. Representative Amabile.
Thank you, Madam Speaker, Madam Chair. I would like to move Amendment L002 to House Bill 1323.
You have it? Yeah. Oh, yeah. Thanks. Oh my God. I thought it was on.
Amendment L2 has been moved and properly displayed. Please proceed. Representative Amabile.
Thank you. This amendment renames the bill the Terry Leiker Act, and it is being renamed in Terry Leiker's memory. Terry Leiker was, by all accounts, a very special human being. She was a Special Olympian. She competed in track and field, softball, and basketball. She lived in Boulder for most of her life and loved to attend sporting events at CU. She was known as a big hugger with a big smile and an abundance of compassion. She loved the Flatirons and the beauty of nature. Terry worked at King Soopers in Table Mesa for 30 years. She was well known by everyone who shopped there, which was a lot of the people in Boulder. Tragically, she was killed during the shooting on March 22nd. She will be dearly missed by her family, who are watching today from home, and by our whole community and our whole state. It is a privilege to honor Terry today in this way. And I know that her family who's watching is really excited and proud to have this honor for their daughter, Terry. I ask you for a yes vote.
Thank you, Representative Amabile. Is there any further discussion on Amendment L2? Seeing none, the question before us is the adoption of the amendment. All those in favor, please say aye.
Aye.
All those opposed say no. The amendment passes. To the bill. Representative Cutter.
Thank you, Madam Chair. So you heard the justification for the bill in support of Special Olympics and in support of wonderful individuals like Terry Leiker. We're really excited to bring you this bill and be able to honor her and provide, again, some recognition and support for a wonderful organization that does so much for the Special Olympians here in Colorado. We ask for your aye vote.
Is there any further discussion on House Bill 1323? Representative Amabile.
It's a great bill, and Terry Leiker deserves this great honor, and I urge an aye vote.
Seeing no further discussion, the question before us is the passage of House Bill 1323. All those in favor say aye.
Aye.
All those opposed say no. House Bill 1323 passes. Mr. Gregorio, please read the title to House Bill 1301.
House Bill 1301 by Representatives Escar and Holtorf, also Senators Quorum and Moreno, concerning the removal of impediments to cannabis farming and in connection therewith permitting contingency plans to reduce crop loss based on adverse weather and convening a work group to examine measures to reduce cross-pollination.
Madam Majority Leader.
Thank you, Madam Chair. I move House Bill 1301, the Appropriations Report, and the Agriculture, Livestock, and Water Committee report.
To the Appropriation Report.
Thank you, Madam Chair. In the Appropriations Committee, we went over the fiscal note, and it was approved by the Appropriations Committee. Ask for an aye vote.
Is there any further discussion on the committee report? Seeing none, the question before us is the adoption of the appropriation report. All those in favor say aye.
Aye.
All those opposed, no. The report is adopted. Madam Majority Leader.
Thank you. In the Agriculture, Livestock, and Water Committee, we ran several amendments. And the reason we ran several amendments, there was 7 amendments that we ran in that committee. It was all part of the stakeholder process. They were all different amendments for different members that had an interest in this bill to make sure that we were able to get everyone to neutral or support. And it passed through the committee with all the amendments on it. We ask for an aye vote.
Representative Holtorf.
Thank you, Madam Chair. I also want to highlight the hard work that was done and the consideration to all of the stakeholders as the amendments came forth in committee. And we listened to everyone, and we worked hard to try to meet the needs of all the players in the cannabis and the hemp space in Colorado. So I was very pleased that everyone in that space was listened to, and those amendments were accepted.
Is there any further discussion on the Agricultural, Livestock, and Water Committee report? Seeing none, the question before us is the adoption of the committee report. All those in favor say aye.
Aye.
All those opposed, nay. The report is adopted. To the bill. Madam Majority Leader.
Thank you, Madam Chair. Members, House Bill 1301 is a bill that I think is completely necessary with where we're sitting at today. For the first 5 years that Colorado actually regulated cannabis, all cultivations were required to be indoors, and regulations were established that were reflective of indoor cultivation. But for anybody who knows anything about outdoor planting, farming, growing, you know that growing outdoors is something that is much different. This bill provides the necessary cleanup language relevant specifically to Colorado's outdoor cannabis farming operations and actually creates 2 different task forces. One committee will actually be meeting to really discuss the issues of cross-pollination. And if you ever want to know anything about cross-pollination, you can ask my co-prime. He explained it very well in committee, what can happen with cross-pollination, not just between different types of marijuana plants, but between marijuana and hemp, male and female crops. This is an issue that's actually happening in a lot of areas across Colorado with our hemp farmers and our cannabis farmers. And we just need a task force to kind of get their heads together and come up with different ideas before we just start throwing regulations at them to really have it be comprehensive and understandable. Another task force that is created in this bill is we know that Colorado has been a pioneer when it comes to the cannabis industry, but we also know that soon the federal government could possibly legalize marijuana across, or legalize cannabis across the entire United States. And we want to make sure that Colorado is poised to still be a leader and poised to remain competitive when and if that shall happen. So it's a task force brought together to really examine and look at the different taxing entities when it comes to marijuana and to have those conversations ahead of time so we're not caught from behind. That's the gist of the bill. It does a lot of great things. Also, just want to mention, because in Southern Colorado it's a big issue, we are actually hoping to get some regulations with MEDs set forward to make sure that shall adverse weather conditions happen, which we know happens in Colorado, early frosts, late snows, hailstorms coming in, that these essential farmers, I guess you'd call them, folks that work in this industry with outdoor grows, have the ability to actually physically harvest sooner than they would need to protect their crops. As you know, if you grow cannabis, it's not actually federally insured like other agricultural crops, so we want to find a way for them to be able to process what they need to process and protect their investment here in Colorado.
Representative Holtorf.
Thank you, Madam Chair. I just want to reiterate and highlight some of the points made by our majority leader. The biggest issue, I think, is the cross-pollination, and this is actually going to help solve, work towards defining a pathway to solve those problems. In the cannabis and hemp space, you cannot have a co-ed environment. It does not work. We recognize that in the industry, and this is going to help decide how we move forward in that area. I think the ag labor issue is a problem across agriculture, but this also eases the requirements for the licensing to get those workers out in the cannabis industry. Also, those emergency or inclement weather plans are so important because we all know that when you have an early freeze in Colorado, corn farmers are concerned, as well as cannabis farmers are concerned. And if you can have that plan and have it approved and you can do an early harvest, it's so important. I, as a production agriculturalist, raise a lot of hay. And we know that if we have inclement weather, we've got to lay that hay down before that weather comes in. That can be done very quickly. Now, for those of us in the hay business, we know that if that decision is made, it's a lot of hours and long nights to get that done. People need to understand the industry. But once you get that crop on the ground, then the weather can come and the crop is not lost, even though the crop might not be optimal or at its highest level stage of maturity. But as they say in agriculture, something's better than nothing. So, along with the working groups, I think this is a pathway forward. And for Southern Colorado, I think very strong support of the direction we're going with House Bill 211301.
Is there any further discussion on House Bill 1301? Representative Van Winkle.
Thank you, Madam Chair, and I thank you both for the hard work and lawn thought and all the work that went on behind the scenes with this bill. One question I have is, this past summer, as you know, we had dramatic wildfires across the state of Colorado, and even smoke from, California and Oregon and those places. And what happened is a lot of that smoke got, some of the more toxic things that are in the smoke got into the outdoor grows. And a lot of that had to be thrown away because we do have such high standards in the state of Colorado for any toxins or anything that gets into perhaps that marijuana plant. Would this bill help address that for those outdoor growers? And I guess that's a question. Well, if we have another bad fire season in the year ahead, will it help them either get those crops out, is harvested faster, or does it not affect that whatsoever?
Representative Holtorf.
Thank you, Representative Van Winkle, for that question, and it is a good question. What this bill will do is allow for those production agriculturalists, the growers out there, irrespective of what their crop is, but specifically in this bill, cannabis and hemp, to have a plan that addresses all of the environmental factors that may be faced by growers. So it will be addressed, and any grower can actually determine what environmental impacts will be most impactful and plan for contingencies for that. So this bill does that. It allows for that. Those plans actually are approved by MEB. But I want to reiterate something for those of us in agriculture. You know, you don't need to go to Las Vegas to gamble. If you got the itch, just get into agriculture. You gamble every day of your life, okay? The chips are on the table every day. The stack is pretty darn high. And you can live that exciting lifestyle without taking the trip. And we all know that in the industry, but we love to produce, we love to plant the seeds, we love to watch the crops grow, and we love to harvest those crops. And so this bill is going to allow for that. And we are going to move to a better place in the cannabis and hemp space when the things that are in this bill come to fruition.
Is there any further discussion? Seeing none, the question before us is the passage of House Bill 1301. All those in favor say aye. Aye. All those opposed say no. The ayes have it. House Bill 1301 passes. Mr. Gregorio, please read the title to House Bill 1306.
House Bill 1306 by Representatives Garnett and Geithner, also Senators Rodriguez and Lundin, concerning approvals of certain entities to operate as post-secondary educational entities in the state.
Mr. Assistant Minority Leader.
Thank you, Madam Chair. I move the committee report, the Appropriations Committee report, to House Bill 1306.
To the Appropriation Report.
Members, the appropriations, we just appropriated the funding necessary for the purposes of 1306, and I would ask for a yes vote.
I'm sorry, Mr. Speaker, can you also move the bill?
Thank you, Madam Chair. I move House Bill 1306.
Thank you. We're back to the Appropriations Committee report. Is there any further discussion on the committee report? Seeing none, the question before us is the adoption of the Appropriations Committee report. All those in favor say aye. All those opposed say no. The report is adopted. To the bill. Mr. Speaker.
Thank you so much, Madam Chair. I move Amendment L003 and ask for it to be displayed.
Amendment L003 has been moved and properly displayed. Please proceed, Mr. Speaker.
Thank you, Madam Chair. This amendment narrows House Bill 1306 to programmatic accrediting bodies recognized by the Council of Higher Education Accreditation to accredit specifically construction education institutions. This was an issue raised by Representative Kipp in the Education Committee, and we have worked with stakeholders and the community colleges, and we've gotten to a place, I think, of agreement, and I would urge an aye vote on L003.
Is there any further discussion? Seeing none, the question before us is the adoption of Amendment L003. All those in favor say aye.
Aye.
All those opposed say no. The amendment is adopted, passes, sorry. To the bill. Mr. Assistant Minority Leader.
Thank you, Madam Chair. And members, 1306 had some great testimony on it. It did actually pass through education unanimously. And one of the most interesting facts that I think that was offered during that testimony is just the growth that the construction industry will see by 2028. And that's about 30%. So seeing the amount of growth that is going to happen within the construction industry, the purpose of 1306 is to also help those folks that are working in the industry move and have a better opportunity at accessing the upper middle or the middle class through trade skills and those sorts of a thing. And so with that, I would ask for a yes vote on 1306. I think the future is bright for the industry. And I think 1306 goes a long way in ensuring that we have quality trade skill workers across the state.
Mr. Speaker.
Thank you, Madam Chair. And I'm going to say thanks to Representative Geithner for working with me on House Bill 1306. You know, this really is about career mobility, making sure those that have already invested time building up credits are able to transfer those, get the degrees that they deserve without facing duplication and having to take those courses again. This is going to save people money. This is going to allow people to pursue management degrees and ways to continue to move up in the industry, and I would urge an aye vote.
Is there any further discussion on House Bill 1306? Seeing none, the question before us is the passage of House Bill 1306. All those in favor say aye. Aye. All those opposed say no. Okay. The bill passes. Mr. Gregorio, please read the title to House Bill 1229.
House Bill 1229 by Representatives Tatone and Ricks, also Senator Fields, concerning increased protections for unit owners in the governance of unit owners associations under the Colorado Common Interest Ownership Act.
Representative Tatone.
Thank you, Madam Chair. It's an honor to serve with you.
It's an honor to serve with you.
All right. I move House Bill 1229. The Finance Report and the Business Affairs and Labor Report.
To the front. Sorry. Thank you. To the Finance Report.
In Finance Committee, we ran an amendment to adjust the Business Affairs and Labor Committee report a little bit to take a little bit more out of the strike below amendment, and I ask for an aye vote.
Is there any further discussion on the Finance Committee report? Seeing none, the question before us is the adoption of the committee report. All those in favor say aye.
Aye.
All those opposed say no. The report is adopted. Representative Titone.
Thank you, Madam Chair. In the Business Affairs and Labor Committee, we had a strike below, and it cut a lot of the language out of the introduced bill. And I have an amendment I would like to run to the report. It's Amendment L025. I move Amendment L025.
Amendment L025 has been moved and displayed. Please proceed.
All right, thank you, Madam Chair. So Amendment L025 changes the bill because there is another bill on HOAs that's being run, and this conflicted with it. So we are taking that part out of the committee report so the two bills can exist in harmony. I ask for an aye vote.
Is there any further discussion on Amendment L25? Seeing none, the question before us is the adoption of Amendment L25 to the Business Affairs Committee report. All those in favor say aye.
Aye.
All those opposed say no. The amendment is adopted. To the committee report. Representative Ricks.
Thank you, Madam Chair. So this bill basically makes several changes to the regulations for homeowners associations. It prohibits the use of non-vegetative turf grass and limited on how they may restrict the implementation of renewable energy. It also has a restriction on political signs. Oh, we took all of that out. So basically, we had to streamline the bill quite a bit to allow for different changes. One of the key pieces that we added to the bill, though, was from the Realtors Association, which regarding forms and documents that are needed for the sales and transfers of townhomes or people that are in common interest communities. So that is a piece that we've added. We also allow turf grass and a few other changes. There were over 906 complaints that were made through DORA regarding HOAs, and we were trying to solve some of those issues. It's a small start toward that, and hopefully we'll be able to bring more bills next year.
Is there any further discussion on the Business Affairs Committee report? Seeing none, the question before us is the adoption of the committee report. All those in favor, please say aye.
Aye.
All those opposed, say no. The committee report is adopted. To the bill. Representative Titone.
Thank you, Madam Chair. There's a lot of people who live in HOAs here in Colorado, and they're in all of your districts. Every single one of you has an HOA in your district, and there's a lot of issues that go on with HOAs, especially with boards. There's a lot of power that boards have that's really left unchecked, and our statutes allow that kind of behavior. And the original introduced bill attempted to solve a lot of those issues, but we weren't able to come to any agreement on what that language would do to help those folks, so we're going to have to circle back around next time and fix some of those. But the language we do have in the bill now is going to help some people with some of their issues, and we'll have to fix the rest of those issues another time. But in the meantime, let's get an aye vote on this bill and give some people some relief that they need. Ask for an aye vote.
Is there any further discussion on House Bill 1229? Representative Woog.
Thank you, Madam Chair. And I do appreciate a lot of these amendments. I just in general, it just concerns me for us as legislators to kind of try and interfere with what right now is a small form of government with HOAs. I think we need to steer clear of that, and I urge a no vote on this bill. Thank you.
Is there any further discussion on House Bill 1229? Seeing none, the question before us is the adoption of House Bill 1229 as amended. All those in favor, please say aye. Aye. All those opposed say no. The bill passes. Mr. Gregorio, please read the title to Senate Bill 81.
Senate Bill 81 by Senator Kolker, also Representative Michael St-Jeannet, concerning procedural measures to prevent the misuse of the Safe to Tell program.
Representative Michael St-Jeannet.
Thank you, Madam Chair. Point of clarification on the committee report. Oh, we don't have a committee report. I move Senate Bill 81. It has no committee report.
To the bill.
I am going to call up my colleague, Representative Luck, because we have an amendment to the bill.
Representative Luck.
Thank you, Madam Chair. Thank you, Representative Michael St-Jeannet. So one of the conversations that we had around this bill was related to notice to our students. So if we're going to change the parameters of Safe to Tell, then it is important that we give them proper notice in advance, that we could indeed find out who they are in very small instances, and so that way they know before they make any sort of phone call that they could be held responsible for their actions. And so as a result, I have this amendment that I'd like to move, Amendment L008. So what this amendment would do would just be to give...
Representative Luck, let's just get it displayed really quickly. Okay, go ahead. Sorry.
Moving quite ahead these days. Thank you. So this amendment would just allow for an educational piece to be added in so that the students will be given proper notice about the instances when their use of Safe to Tell could actually result in their own personal liability. And I thank the sponsor for working on this with me, as well as those interested parties out in the hallway, and I ask for an aye vote. Thank you.
Is there any further discussion on Amendment L008? Seeing none, the question before us is the adoption of Amendment L08. All those in favor, please say aye. Aye. All those opposed say no. The amendment is adopted. To the bill. Representative Michael St-Jeannet.
Thank you. Thank you, Representative Luck. Thank you, Judiciary Committee. Thank you, Representative Weissman. We spent a long time making sure to get this bill right. And ultimately, we bring this bill forward because about 2.5% of the calls received on Safe to Tell are being used to bully other children. And we want to make sure that it is clear, and that's what Representative Luck's amendment just did, making sure that it's clear to the students, and that they are aware that if this tool is used for bullying, they will be held accountable. And I ask for an aye vote.
Madam Speaker Pro Tem.
Thank you, Madam Chair. And members, we heard this in committee, and we really struggled with this bill because Safe to Tell is an anonymous program where students are encouraged to make reports anonymously. And the struggle is what happens if you hear a report and there is something that somebody has a gun and is walking to the school. Then what do you do? And there is a portion of the bill I think there was pretty much unanimity on, which was for exigent circumstances, that they should be able to contact law enforcement and be able to let them know this is going to happen right away. And that's great. The next portion of the bill, including the part about bullying, because once students know that if they report things, it's no longer anonymous, it's a problem. I think it undermines the entire program. And students are pretty smart. They figure that out. And there's some other problems with the program because some of the other measures in here were intended for public safety. But if you read the statute on the Safe to Tell program, it is really a program of the Attorney General's office. It is not a program of public safety, although public safety is taking the calls. But there is no agreement between public safety and the Attorney General's office. So technically, public safety in an anonymous program should not be doing those calls. And there was no agreement between the Attorney General's office and public safety. So there's a lot of problems with the program, and I think other than the exigent circumstances, I think the rest of it really just exacerbates the problems in the program and undermines the program. I voted no in committee and will continue to vote no on it because bullying, we think it is terrible and it can be reported, but nobody's going to report it if they think they're going to be turned in as a result of that. I mean, I would hope if somebody called Safe to Tell and said somebody else is bullying, that somehow, without identifying the individual, somebody who could maybe take some action, maybe school authorities, without identifying the caller, would take those actions. And I think that's the intent of the program, but I think the way the rest of this bill, it really is problematic on how and when information is released from that anonymity. And again, I can't underscore enough that I think this will be a problem for the program overall, and I think those other technical issues need to be fixed. I mean, we flat out asked public safety, and they had no real good answers because it's being abused right now because public safety should not have this information, yet they do. So I would urge a no vote and spend some more time over the interim before we come back next year and really address the problem, fix the problem, put it somewhere that it can address these problems and encourage students to be able to do this with anonymity. So I urge a no vote.
Representative Bockenfeld.
Thank you, Madam Chair. It's an honor to serve with you.
It's an honor to serve with you.
And I agree with absolutely everything that Representative Benavides said. I ask for a no vote.
Representative Michelson Janae.
Thank you, Madam Chair. We did speak with a number of kids who felt like the change in the law would benefit them. And yes, they are very smart, and yes, they do understand. This is a very safe tool if you are using it in good faith. Thank you. But if you do use it to swat or to bully, you will be held accountable. I ask for an aye vote.
Is there any further discussion on Senate Bill 81? Seeing none, the question before us is the passage of Senate Bill 81 as amended. All those in favor, please say aye. All those in favor, please say aye. Thank you. All those opposed, say no. Senate Bill 81 passes. Mr. Gregorio, please read the title to Senate Bill 128.
Senate Bill 128 by Senator Kolker, also Representative Lontine, considering modifications to the administration of the Nursing Home Penalty Cash Fund in connection therewith, making and reducing appropriations.
Representative Lontine.
Thank you, Madam Chair. I move Senate Bill 128 and the committee report from Health and Insurance. I'm sorry, Appropriations.
To the Appropriations report.
Thank you, Madam Chair. It changes the percentage of administration costs from 5 to 10%, and I ask for an aye vote.
Is there any further discussion on the Appropriations Committee report? Seeing none, the question before us is the adoption of the committee report. All those in favor, please say aye.
Aye.
All those opposed, say no. The committee report is adopted. To the bill.
Okay, thank you, Madam Chair. When our nursing homes are fined for violations by CDPHE, that money goes to the Nursing Home Penalty Cash Fund. And this cash fund is used for a grant fund that nursing homes can apply to use for the purpose of enrichment programs for residents. And currently, this program is administered by HCPF, which doesn't really have any capability for administering grant programs. And so they and CDPHE agreed to move this program from HCPF to CDPHE, who has lots of expertise. They have multiple grant programs that they manage so that CDPHE can administer it in a place where they have that expertise. And so I asked for an aye vote.
Is there any further discussion on Senate Bill 128? Seeing none, the question before us is the passage of Senate Bill 128. All those in favor, please say aye. Aye. All those opposed say no. The bill is passed. Mr. Gregorio, please read the title of Senate Bill 98.
Senate Bill 98 by Senators Jaquez, Lewis, and Pedersen, also Representatives Mullica and Rich, concerning the continuation of the prescription drug monitoring program.
Representative Mullica. Representative Rich.
Thank you, Madam Chair. I move Senate Bill 21098 and the appropriations report.
Representative Rich.
Thank you, Madam Chair. We were in appropriations on May the 21st and received a favorable recommendation.
Sorry, Representative Rich. I don't think there is an Appropriations Committee report. So we can go.
Yes, there is.
There is? Nope.
No?
No, you're fine.
Okay, we're going to go straight to the bill.
Oh, that's right. We didn't have an amendment. Okay.
Thank you.
Sorry. Okay. Do you want to take that?
Yeah, we're just moving the bill.
Yeah.
Rep. Mullica. Representative
Thank you.
Mullica.
Madam Chair, has the bill been moved?
Yes.
Okay, perfect. Thank you, Madam Chair. Members, this is the sunset for the PDMP, which is a valuable resource here in Colorado, making sure that our providers can have access to the data around individuals and patients who are prescribed controlled substances. It's one that we've heard from providers how much they are able to use it. It's one that Representative Rich and I have worked extensively on, not just in this bill, but in other bills, and we've both seen how valuable it is, and that's why I think we both were excited to bring the sunset to make sure that this tool was still available to our providers, and not only to our providers but to our patients, to make sure that they're able to be provided care in the safest way possible. I'd ask for a yes vote.
Representative Rich.
Thank you, Madam Chair. As Representative Mullica said, our healthcare providers are very supportive of this, as are our pharmacists, and I ask for an aye vote.
Is there any further discussion on Senate Bill 98? Seeing none, the question before us is the passage of Senate Bill 98. All those in favor say aye. Aye. All those opposed say no. The ayes have it. Senate Bill 98 passes. Mr. Gregorio, please read the title of the Senate Bill 201.
Senate Bill 201 by Senators Danielson and Pedersen, also Representatives Young and Basenecker, concerning stricter enforcement for child care facilities and in connection therewith making an appropriation.
Representative Young.
Madam Chair, it is an honor to serve with you and sit next to you.
Thank you so much. The pleasure and honor is all mine.
I move Senate Bill 21201 and the Public and Behavioral Health and Human Services Report.
To the committee report.
The Public and Behavioral Health and Human Services Report included an amendment which changed the date of the implementation on the website Colorado Shines from July 1st to December 31st, since there are going to be 2 updates on the department's website, and it will be completed by December 31st. In the interim, it will be in a spreadsheet format on Colorado Shines.
Thank you. Is there any further discussion on the Public and Behavioral Health Committee report? Seeing none, the question before us is the adoption of the committee report. All those in favor say aye. All those opposed say no. The report is adopted. To the bill. Representative Young.
In August of 2020, I heard a heartbreaking story on the news of a family whose 3-month-old daughter, Ellie, had died in childcare, in which a family thought was a safe childcare facility. Ellie's mother, Kelsey Matthews, a teacher, had dropped her 2 daughters off at childcare that morning, expecting her children to be safely taken care of. Later in the day, she received a dreaded call that led her to the emergency room where her beloved daughter, Ellie, was dead. The child care provider had laid Ellie down for a nap, and she never woke up. Ellie's family later found out through the media that this facility had 4 cease and desist orders, and on the day that Ellie died in care, there were 17 children being cared for. Ellie's family and other families were not aware of the fact that so many children were in this facility since they were hidden behind a false wall. Before placing their children at this child care facility, the family did extensive research about this facility, including interviewing the provider, and found no mention of any problems. They had done their due diligence to make sure their daughters had safe child care, but the information wasn't available to them. In committee, Kelsey testified that if she had known about the complaints filed and the cease and desist orders against the child care provider, she wouldn't have taken her children there. Parents shouldn't have to jump through hoops to get the information they need to determine if their provider is fit. This bill accomplishes 2 major goals. It adds a requirement for the State Department of Human Services to include cease and desist orders that have been issued against a child care facility on the department's child care website, Colorado Shines. And it increases the legal actions and penalties for family child care license violations, and adding a new offense related to child care licensing violations. I urge an aye vote.
Representative Basenecker.
Thank you, Madam Chair. I want to thank Representative Young for her continued work on this important issue and for welcoming me onto this bill. As access to quality and affordable and safe childcare remains a pressing need for so many Coloradans, SB 21-201 would strengthen vital accountability for childcare providers and provide critical safety information for parents who are looking for childcare. I want to take a moment and just highlight something tangible for those of us who are parents, and that's that moment where for the first time you hand off your child in the trust into the care of another human being. There is no trust. There's no trust more sacred or more important than the decision to trust another human being with the safety and well-being of your child. Making these cease and desist orders and this information easily accessible to parents is a timely and transparent, and it's a prudent measure. And at the end of the day, it's designed to keep children safe. So with all that, I ask for an aye vote on SB 21-201.
Is there any further discussion on Senate Bill 201? Seeing none, the question before us is the passage of Senate Bill 201. All those in favor say aye.
Aye.
All those opposed say no. The Senate bill passes. Mr. Gregorio, please read the title to Senate Bill 95.
Senate Bill 95 by Senator Danielson, also Representative Ricks, concerning the continuation of the Employment First Advisory Partnership and in connection therewith implementing the recommendation contained in the 2020 Census Report by the Department of Regulatory Agencies and creating a hiring preference pilot program for people with disabilities.
Representative Ricks.
Thank you, Madam Chair. It's an honor to serve with you.
The honor is all mine.
I move the appropriations report, the committee report, and the bill SB 95.
Okay, you can move the bill. I do not believe there's a committee report.
Oh, no committee report. Okay.
To the bill.
Okay, to the bill. So this bill, SB 95, is called the Employment First Advisory Partnership Extension, and basically it's a sunset bill that began in 2016, where with changes to the federal policies and guidelines, it related to the employment for people with individuals with disabilities. And EFAB, which is the Employment First Advisory Partnership, is a nationally recognized program that prioritizes employment for people with disabilities, regardless of the level of disability. Since the creation of the EFAP program in Colorado, we've made great strides to continue to focus on policies and programs and practices that increase integrated employment of individuals with disabilities. However, Colorado still has a lot to do and to realize measurable expansion of employment opportunities for people with disabilities. This bill will extend the EFAP program to ensure that Colorado is continuing to develop and implement policies and practices that will allow full participation of people with disability within our state. To support this program, there's going to be a pilot program started by the Colorado Division of Employment that will create a hiring preference for people with disability. And by creating this hiring preference pilot within the state government, it will enable the state of Colorado to model inclusive hiring practices, access to the best talent, and ensure that individuals with disability are afforded the opportunity to compete for and obtain employment aligned with their unique talents within the states. This is a great bill to help people living with disability and allow them full participation in our workforce. I ask for a yes vote.
Thank you. Representative Mike, nope, okay. Sorry. Is there any further discussion on Senate Bill 95? Seeing none, the question before us is the passage of Senate Bill 95. All those in favor, please say aye.
Aye.
All those opposed say no. The ayes have it. Senate Bill 95 passes. Mr. Gregorio, please read the title to Senate Bill 126.
Senate Bill 126 by Senator Fields, also Representatives Michelson, Janae, and Soper, concerning credentialing of physicians as participating physicians in health coverage plan provider networks and in connection therewith, making an appropriation.
Representative Michelson, Janae.
Thank you, Madam Chair. I move Senate Bill 126 and ask for an aye vote.
To the bill? Representative Soper.
Thank you, Madam Chair. So I joined this bill after seeing a very real problem in which this bill addresses. So as many of you know, I serve on the Delta County Memorial Hospital Board. Yeah, no, I do. Yeah, it's true. And I was alerted to the fact that there's a problem, which is a doctor may be board certified and licensed here in Colorado to practice medicine, but then when it comes to being licensed with the insurance company to be able to be reimbursed from them, there can be a hiccup here, a long delay period. And what this bill does is it gives some assurances that the insurance company needs to, within 7 days, respond back to the physician or the provider acknowledgement that they're applying to be credentialed with the insurance company, and then ask the insurance company to make a decision within 60 days. And this is something that was a negotiated approach between the Colorado Medical Society and the carriers, and has their support. Everyone likes the fact that this is some known times in law for when they could expect to hear an answer back, and it certainly makes our government more streamlined and ensures that people can have access to health care, especially in rural areas where there are massive delays in getting our doctors credentialed with the insurance carriers.
Representative Michelson, Janae.
Thank you, Madam Chair. I will just add that this bill, as highlighted by Representative Soper, was worked on together by Colorado Medical Society and the providers before it came to us. And I point this out, members, because that's really unusual in our chamber. And I am very grateful to the providers. I'm very grateful to Colorado Medical Society for coming together, giving us a proposal, and giving us something valuable that we can move forward that will make a difference not only for the doctors in our community, but also for the patients and also for the hospitals or offices, et cetera. I ask for an aye vote.
Is there any further discussion on Senate Bill 126? Seeing none, the question before us is the passage of Senate Bill 126. All those in favor, please say aye. Thank you. All those opposed, say no. Okay. Senate Bill 126 passes. Oh, I'm sorry. Madam Speaker Pro Tem.
Thank you, Madam Chair. I ask that Senate Bill 21-148 be moved to the end of the agenda after Senate Bill 21-181.
Are there any objections? Seeing none, we will reorder the bills. Mr. Gregorio, please read the title to Senate Bill 181.
Senate Bill 181 by Senators Fields and Quorum, also Representatives Herod and Caraveo, concerning state agencies addressing health disparities in Colorado and in connection therewith making an appropriation.
Representative Caraveo.
Thank you, Madam Chair. I move Senate Bill 181 and the Appropriations Committee report.
To the committee report.
In appropriations, we allocated money to the grants program that will be used for local programming addressing health equity. I ask for an aye vote.
Is there any further discussion on the appropriations report? Seeing none, the question before us is the adoption of the committee report. All those in favor, please say aye.
Aye.
All those opposed say no. The report is adopted. To the bill.
Thank you.
Representative Herod.
Thank you, Madam Chair. It's an honor to serve with you.
Honor's all mine.
Members, this is a great bill that addresses health equity in our state. As we know, the COVID pandemic has really underscored our need to address this issue in a very intentional way. I'm proud to work with the administration to getting this done. I ask for an aye vote.
Is there any further discussion on Senate Bill 181? Seeing none, the question before us is the is the passage of Senate Bill 181. All those in favor, please say aye.
Aye.
All those opposed say no. The bill passes. Mr. Gregorio, you ready? Okay. Madam Speaker Pro Tem.
Thank you, Madam Chair. I ask that we go into a short recess so we can find all the sponsors.
The committee will move into a short recess. The committee will come back to order. Never mind, we are still in recess.
We're trying to get a hold of Danae. No.
The committee will come back to order. Representative Tipper.
Thank you, Madam Chair. I move Senate Bill 148.
I gotta read it.
I'm sorry. We got to back up just one second. Mr. Gregorio, please read the title to Senate Bill 148.
Senate Bill 148 by Senators Gonzalez and Coker, also Representatives Escar and Tipper, concerning the creation of the Financial Empowerment Office in the Department of Law and in connection therewith making an appropriation.
Madam Majority Leader.
Thank you, Madam Chair. We move Senate Bill 148, and there is no committee report.
To the bill.
Thank you, Madam Chair. The state of Colorado, we know, is booming with economic opportunity because of the recent stimulus and really bringing the economy back. Colorado voters soundly defeated predatory payday loan products. And while this was certainly a success, it did not ensure that all Coloradans will have access to affordable and safe credit. Nearly 22% of Coloradans and 49% of households of color are either unbanked or underbanked, relying on what are often predatory alternative financial services to meet basic financial needs. This bill gives us a whole new way to kind of move forward and make sure that all Colorado residents have an opportunity for financial success.
Representative Tipper.
Thank you, Madam Chair. So what the bill does is it creates a statewide office in the Department of Law, the Office of Financial Empowerment and Protection, and it's modeled off of the office in Denver that has had really great success rates. And sadly, one of the reasons we know of the success rates is COVID actually provided this opportunity to have these really sort of before and afters. And so what we saw in Denver is that last year alone, it helped residents reduce $1.4 million in debt. It boosted their savings by $227,000, and they avoided $826,000 in tax preparation fees and improved their credit scores by an average of 43 points. And so what we saw is this office, the services that it can provide, has actually helped individuals get back on their feet and back on their feet faster. And with that, I ask for a yes vote.
Is there any further discussion on Representative Ransom?
Thank you, Madam Chair. When I read the title of this bill, Creating an Office, the creation of the Financial Empowerment Office in the Department of Law, my first reaction was this is not the role of government, and I will actually continue with that. When you go through the bill and look at the fiscal note, there's actually money that we will be using to have this financial empowerment office put in place, including a car, folks. There is a state car involved for this administrator to drive all around the state because this is a statewide office. So we are going to tax people in order to financially empower them. And honestly, going through this, there are so many private groups. There are nonprofits, there are private groups that literally help people get out of debt. There are plenty of them already in place. I know that I have seen them. I know that they help, that there are these nonprofits that work with different types of groups like students, kids graduating from college, things like that. So this is an office that can already be handled. If it's handled locally, it could be more apropos to the people that actually need the help versus creating another layer of bureaucracy in our state that is, again, costing more money, more taxes to the people that are actually working. And getting people out of debt, yes, is something that we like to see, but again, this is not the role of government. I ask for a no vote on the bill.
Representative Hanks.
Thank you, Madam Chair. I heard this in committee, and I appreciate the intent on it. I had some questions as to. As did Representative Ransom just mentioned, should this be in the office of, in the Department of Law? And I have to tell you, again, I'm not wasting anybody's time here. This is 9 pages. But in the bottom line, the question I have is, isn't this the type of information and process that we used to teach in high school? I'm not sure we don't anymore, but let me go through this. Hey, Rod, do you want to come up or you want me to go? I'll come back if you want to. Let me just go ahead and read this. I wanted to make sure we had this lined up and I wasn't jamming my colleague here. This is Senate Bill 21-148, a bill for an act concerning the creation of the Financial Empowerment Office in the Department of Law and in connection therewith making an appropriation. Bill summary. Note, this summary applies to this bill as introduced and does not reflect any amendments that may be subsequently adopted. If this bill passes third reading in the House of Introduction A bill summary that applies to the re-engrossed version, which is what I'm reading to you now, will be available at http://leg.colorado.gov. The bill creates the Financial Empowerment Office, parenthetical office, and the director of the office, parenthetical director, in the Department of Law to grow the financial resilience and well-being of Coloradans through specified community-derived goals and strategies. The director is appointed by the Attorney General and may hire staff as necessary to perform the duties and functions of the office. The office also consists of a manager who is appointed by the director. The office is authorized to partner with governmental bodies, community organizations, financial institutions, local service providers, philanthropic organizations, and other organizations as necessary to achieve the purpose of the office. The office is also authorized to develop or promote new or existing, bullet 1, methods to increase access to safe and affordable financial products. Bullet 2, tools and resources that advance, increase, and improve Colorado residents' financial management. Bullet 3, community-informed strategies that dismantle systemic barriers to building ownership and wealth for all, especially low-income communities and communities of color. And Bullet 4, tools that promote financial stability, such as those that assist with service navigation, eviction avoidance, or connection to income supports. The Financial Empowerment Office is required to, Bullet 1, support the organization of community efforts to define and lead financial resilience strategies. Bullet 2, align, support, and build ties to build financial education and well-being in communities across the state. Bullet 3, establish a council to assist the director in increasing access to ownership, financial well-being, and safe and affordable banking and financial services that help improve the financial stability of Colorado residents, and in identifying products and practices that may undermine financial stability. Bullet 4, work with stakeholders to increase access to safe and affordable credit building loans, credit building loans and financial products. Bullet 5, work with state authorities and other stakeholders to expand access to safe and affordable banking products with low fees and easy access accounts, as well as safe and affordable credit building loans offered by financial services providers licensed in Colorado at costs that do not exceed the financial charges permitted by Colorado law. Bullet 6, work with stakeholders to identify products and practices that may undermine financial stability. Bullet 7, develop technical assistance to launch or expand local financial coaching and counseling efforts. Bullet 8, raise money to support coaching, safe and affordable banking, and potential bank loans. Let me say that again. I start again. Bullet 8, raise money to support coaching, safe and affordable banking, and potential loan funds. And Bullet 9, track community feedback on consumer financial abuses and coordinate with various state agencies, connect consumers with existing resources, and educate the public on their related consumer rights. The office is also required to submit an annual report to the General Assembly regarding the activities of the office, the state of affordable banking access in Colorado, and other specified information. I'm on page 3 here. Be it enacted by the General Assembly of the State of Colorado, Section 1, in Colorado Revised Statutes, add Part 10 to Article 31 of Title 34 as follows. Part 10, Financial Empowerment for Colorado Residents. 24-31-1001, Financial Empowerment Office, creation, Director. 1. There is hereby created in the Department of Law the Financial Empowerment Office, the head of which is the Director of the office. The Financial Empowerment Office and the Director of the office shall exercise their powers and perform their duties and functions under the Department of Law as if transferred to the department by a Type 2 transfer, as such transfer is defined in the, quote, Administrative Organization Act of 1968, unquote, Article 1 of this Title 24. 2. The Director of the Financial Empowerment Office shall be appointed by the Attorney General. The Director may hire staff as necessary to perform the duties and functions of the office. The office shall also consist of a manager who shall be appointed by the Director. 24-31-1002, Financial Empowerment Office Purpose Duties. 1. The purpose of this Financial Empowerment Office is to grow the financial resilience and well-being of Coloradans through, page 4, through community-derived goals and strategies included but not limited to A. Expanding access to safe and affordable banking. B. Increasing access to safe, affordable, low-cost credit offered at costs that do not exceed the financial charges permitted by Colorado law. C. Expanding access to free individual financial counseling and coaching. D. Expanding community wealth building strategies. And E. Identifying barriers to financial empowerment and financial stability. 2. The Financial Empowerment Office may partner with state and federal agencies, local governments, tribal nations, community organizations, financial institutions, local service providers, philanthropic organizations, and other organizations as necessary to achieve the purposes of the office. In furtherance of achieving the purposes of the office subject to available appropriations, the office may develop or promote new or existing A. Methods, programs, and policies to increase access to safe and affordable financial products. B. Tools and resources that advance, increase, and improve Colorado residents' financial management, including strategies for debt and reduction, increasing savings, and creating and retaining assets that promote personal financial stability. C. Community-informed strategies that dismantle, page 5, dismantle systemic barriers to building ownership and wealth for all, especially low-income communities and communities of color. And D. Tools that promote financial stability, such as those that assist with service navigation, eviction avoidance, or connection to income supports. 3. The Financial Empowerment Office shall, subject to available appropriations, A. Support the organization of local community efforts to define and lead tailored financial resilience strategy based on local context, priorities, and expertise from those serving these communities. Stakeholders may include, but are not limited to, representatives of older adults, younger adults, communities of color, underbanked and unbanked Coloradans, immigrants, Coloradans of low income, banks, credit unions, local service providers, local government agencies, and philanthropic organizations. B. Align support and build ties among the numerous and diverse efforts to build financial education and well-being in communities across Colorado. C. Establish a council comprised of financial institutions, the Office of the State Treasurer, local and state officials, tribal nations, philanthropic and community organizations, and other organizations or persons determined by the Director to assist the Director in defining, identifying, creating, expanding, and increasing access to ownership, financial well-being, and safe and affordable banking and financial services that help, page 6, that help improve the financial stability of unbanked and underbanked individuals and families, and to assist the director in identifying products and practices that may undermine financial stability. At no point shall the majority of council members be representative of or have ties to the financial services industry, and every effort shall be made to include representatives of underrepresented communities. D, work with stakeholders to increase access to safe and affordable credit building loans and financial reports. E, work with state authorities and other stakeholders to expand access to safe and affordable banking products with low fees and easy access accounts, as well as safe and affordable credit building loans offered by financial service providers licensed in Colorado at costs that do not exceed the finance charges permitted by Colorado law. F, work with stakeholders to identify products and practices that may undermine financial stability. G, develop technical assistance to launch or expand financial coaching and counseling efforts locally. H, track community feedback on consumer financial abuses, permitting the accused business. Let me say that again. We got some underlines and a few things. I'll start again. Track community feedback on consumer financial abuses, permitting the accused business 30 days to respond prior to any public disclosure, and coordinate with the Consumer Protection Division within the Department of Law and the Department of Regulatory Agencies to connect consumers with existing resources and educate the public on their related consumer rights. Page 7. 4. The Financial Empowerment Office has no independent examination or regulatory authority, but nothing in this Part 10 shall be construed to limit the authorities of the Attorney General, the administrator designated in Section 5-6-103, or the Department of Regulatory Agencies. 5. The Department of Law shall annually report on the state of affordable banking access in Colorado, the activities of the Office of Financial Empowerment, and local partnerships in implementing the objectives of the office as a part of its presentation to its committee of reference at a hearing held pursuant to Section 2-7-203, parenthetical 2A of the quote, State Measurement for Accountable, Responsible, and Transparent, parenthetical SMART, Government Act, unquote. The report shall address access to secure, safe, and affordable financial products, including A, geographic and racial equity considerations, B, an examination of existing financial products regulated by the state of Colorado and other financial products that are being offered within Colorado, C, recommendations for reforms that would encourage greater access to secure, safe, and affordable financial products or would provide better protections to consumers, and D, an examination of local financial empowerment work and the impact on economic security and mobility of residents. Section 2. In Colorado Revised Statutes 24-31-102, amend parenthetical 1G and parenthetical 1H and add parenthetical 1I as follows. 24-31-102, offices, boards, and divisions. 1, the department, page 8. The Department of Law, the chief executive officer of which is the Attorney General, includes the following. G, the Peace Officers Standards and Training Board created in Section 24-31-302, and the Financial Empowerment Office created in Part 10 of this Article 31, and I, notwithstanding Section 24-1-107, any other division, office, or unit established by the Attorney General or by law. Section 3, appropriation. 1, for the 2021 to 2022 state fiscal year, $204,028 is appropriated to the Department of Law. This appropriation is from the general fund. To implement this act, the department may use this appropriation as follows. A, $200,128 for consumer protection and antitrust, which amount is based on an assumption that the department will require an additional 1.8 FTE, and B, $3,900 for vehicle lease payments. 2, for the 2021 and 2022 state fiscal year, $3,900 is appropriated to the Department of Personnel. This appropriation is from reappropriated funds received from the Department of Law under subsection parenthetical 1B of this section. To implement this act, the Department of Personnel may use this appropriation to provide vehicle replacement lease purchase services for the Department of Law. 3, for the 2021-2022 state fiscal year, $17,062 is appropriated to the Department of Treasury for use by the administration. This appropriation is from the general fund and is based on an assumption that the department will require an additional 0.4 FTE. To implement this act, page 8, to implement this act, the department may use this appropriation for personal services. Section 24, effective date. This act takes effect July 1, 2021. Section 5 is the safety clause. The General Assembly hereby finds, determines, and declares that this act is necessary for the immediate preservation of the public peace, health, or safety. Thank you for the indulgence on that. What I might say in closing is what I said when I started. I think predatory loans are a bad thing. We've addressed that in previous legislation, and that sounds good to me. I wasn't here to see it, but just on the face of it, predatory loans are bad. I look at all of this being developed, and I wonder, is this not something we can teach people while they're going through our public education system? Does this have to be a new office to move people along? Does it have to be under the Department of Law? This seems a bit convoluted. I guess that's my word of the week. I'll look for another one while I'm thanking the chair for its indulgence.
Thank you. Representative Bockenfeld.
Thank you, Madam Chair. I'm sorry I got to repeat what I said this morning, but I'm going to repeat it anyway. Government does not tax to get money it needs. Government always finds a need for the money it gets. You can't be for big government, big taxes, and big bureaucracy and still be for the little guy. Now the question is again that the same question that Representative Ransom asked, is this really the role of government? The fiscal note on this bill is going to take approximately $280,000 out of the general fund this year and $286,000 in the subsequent years. This bill is only one paper cut that will lead to the death by 1,000 paper cuts of our budget due to fiscal irresponsibility. But what the heck? As long as Big Daddy federal government is willing to keep backfilling our state budget on the backs of our children and grandchildren, why not spend it? I ask for a no vote.
Is there any further discussion on Senate Bill 148? Seeing none, the question before us is the passage of Senate Bill 148. All those in favor say aye. Aye. All those opposed say no. No. The bill passes. Madam Majority Leader.
Thank you, Madam Chair. I move the committee rise and report.
You have heard the motion. Seeing no objection, the committee will rise and report.
The House will come back to order. Logan, it's very nice to see you. Mr. Gregorio, please read the report of the Committee of the Whole.
Mr. Speaker, your committee of the whole begs leave to report is under consideration the following attached bills, being the second reading thereof, and makes the following recommendations thereon. House Bill 1229 is amended. House Bill 1286 is amended. House Bill 1301 is amended. House Bill 1306 is amended. House Bill 1323 is amended, passed on second reading and ordered engrossed and placed on the calendar for third reading and final passage. Senate Bill 81 is amended. Senate Bill 95, Senate Bill 98, Senate Bill 126, Senate Bill 128 as amended. Senate Bill 148, Senate Bill 181 is amended. Senate Bill 201 is amended, passed on second reading and ordered, revised, and placed on the calendar for third reading and final passage.
Representative Bacon. Thank you, Representative Bacon. You have heard the motion. We have 5 cows at the desk, but I want everyone in the chamber to look at Logan, and let's all wave. Hi, Logan. Good to see you.
You say hello?
Hello.
Hello.
All right. Mr. Gregorio, please read the Baisley Amendment L024 to House Bill 1286.
House Bill. Representative Baisley moved to amend the report of the Committee of the Whole to reverse the action taken by the committee not adopting the following Baisley Amendment L24 to House Bill 1286 to show that said amendment passed and House Bill 1286 is amended passed.
Representative Baisley.
Thank you, Mr. Speaker. I move the Baisley Amendment to the Committee of the Whole and ask for a yes vote.
Is there any further discussion? Seeing none, the question before us is the adoption of the Baisley Amendment L024 to the report of the Committee of the Whole. Mr. Gregorio, please open the machine, and members, please proceed to vote. For those participating remotely, Representative Williams, how do you vote?
Yes.
Representative Williams votes yes. Representative Neville, how do you vote?
Yes.
Representative Neville votes yes. Representative Jackson, how do you vote?
No.
Representative Jackson votes no. Representative Judah, how do you vote?
No.
Representative Judah votes no. Representative McLaughlin, how do you vote?
No.
Representative McLaughlin votes no. Representative Bockenfeld and Representative Froelich and Lontine are excused. All right. Please close the machine. With 25 aye votes, 38 no votes, and 2 excused, the Baisley Amendment to the report of the Committee of the Whole is lost. Mr. Gregorio, please read the Geithner Amendment L023 to the report of the Committee of the Whole.
Representative Geithner moved to amend the report of the Committee of the Whole to reverse the action taken by the committee not adopting the following Geithner and Soper Amendment L23 to House Bill 1286 to show that said amendment passed and House Bill 1286 is amended passed.
Assistant Minority Leader Geithner.
Thank you, Mr. Speaker, and I move the Geithner and Soper Amendment to the Committee of the Whole and ask for a yes vote.
Thank you, Representative Geithner. That has been properly moved and displayed. Is there any further discussion? Seeing none, the question before us is the adoption of the Geithner Amendment to the report of the Committee of the Whole. Mr. Gregorio, please open the machine and members, please proceed to vote.
Yeah, but we're going to take the blue card.
Representative Williams, how do you vote?
Yes.
Representative Williams votes yes. Representative Neville, how do you vote?
Yes.
Representative Neville votes yes. Representative Jackson, how do you vote?
No.
Representative Jackson votes no. Representative Judah, how do you vote?
No.
Representative Judah votes no. Representative McLaughlin, how do you vote?
No.
Representative McLaughlin votes no. And Representative Froelich is here. Please close the machine. With 27, well, sorry, Duran's, there we go. Please close the, please, my goodness gracious. Please close the machine. With 26 aye votes, 39 no votes, and 0 excused, the Geithner Amendment to the report of the Committee of the Whole is lost. Mr. Gregorio, please read the PICO Amendment to the report of the Committee of the Whole.
Representative Pico moved to amend the report of the Committee of the Whole to reverse the action taken by the committee in adopting the following PICO Amendment L17 to House Bill 1286 to show that said amendment passed and that House Bill 1286 as amended passed.
Representative Pico.
Thank you, Mr. Speaker. I move the PICO amendment and ask for an aye vote.
That has been properly moved and displayed. Is there any further discussion? Seeing none, the question before us is the adoption of the PICO Amendment to the report of the Committee of the Whole. Mr. Gregorio, please open the machine and members, please proceed to vote. Representative Williams, how do you vote?
Yes.
Representative Williams votes yes. Representative Neville, how do you vote?
Yes.
Representative Neville votes yes. Representative Jackson, how do you vote?
No.
Representative Jackson votes no. Representative Judah, how do you vote?
No.
Representative Judah votes no. Representative McLaughlin, how do you vote?
No.
Representative McLaughlin votes no. Representative Doherty, Lontine, and Tipper. That's a $4 fine, Representative Tipper. Can't be on the phone during third reading. Not supposed to be on the phone. All right. Please close the machine. Yeah, apparently it doesn't matter. It's fine. Please close the machine. With 24 aye votes, 41 no votes, and 0 excused, the PICO Amendment to the report of the Committee of the Whole is lost. Mr. Gregorio, please read the Soper Amendment L020 to House Bill 1286.
Representative Soper moved to amend the report of the Committee of the Whole to reverse the action taken by the committee in not adopting the following Soper and Geithner Amendment L20 to House Bill 1286 to show that said amendment passed, that House Bill 1286 is amended passed.
Representative Soper.
Thank you, Mr. Speaker. I move the Soper and Geithner Amendment to the Committee of the Whole report.
It's been properly moved and displayed. Representative Soper.
Thank you, Mr. Speaker. This amendment exempts out the hangers. And it's gotten to that time of day where I guess I'm hangry, but I'd ask for a yes vote.
Seeing no further discussion, the question before us is the adoption of the Soper Amendment L020 to the report of the Committee of the Whole. Mr. Gregorio, please open the machine and members, please proceed to vote. Representative Williams, how do you vote?
Yes.
Representative Williams votes yes. Representative Neville, how do you vote?
Yes.
Representative Neville votes yes. Representative Jackson, how do you vote?
No.
Representative Jackson votes no. Representative Judah, how do you vote?
No.
Representative Judah votes no. Representative McLaughlin, how do you vote?
No.
Representative McLaughlin votes no. Please close machine. With 28 aye votes, 37 no votes, and 0 excused, the Soper Geithner Amendment to the report of the Committee of the Whole is lost. Mr. Gregorio, please read the Will Amendment to the report of the Committee of the Whole.
Representative Will moved to amend the report of the Committee of the Whole to reverse the action taken by the committee in not adopting the following Will and Soper Amendment L21 to House Bill 1286 to show that said amendment passed and that House Bill 1286 as amended passed.
Representative Will.
Thank you, Mr. Speaker. I move the Will Amendment to the Committee of the Whole. And when you were voting on this, I think it was a really friendly amendment, but when you yelled yes and there was only a couple no's, this is your chance to really record it. So thank you.
Thank you, Representative Will. That's been properly moved and displayed. The question before us, seeing no further discussion, is the adoption of the Will Amendment to the report of the Committee of the Whole. Mr. Gregorio, please open the machine, and members, please proceed to vote. Representative Williams, how do you vote?
Yes.
Representative Williams votes yes. Representative Neville, how do you vote?
Yes.
Representative Neville votes yes. Representative Jackson, how do you vote?
No.
Representative Jackson votes no. Representative Judah, how do you vote?
No.
Representative Judah votes no. Representative McLaughlin, how do you vote?
No.
Representative McLaughlin votes no. Please close the machine. 24 aye votes, 41 no votes, and 0 excused. The Will Amendment to the report of the Committee of the Whole is lost. There are no further amendments at the desk. The question before us is the adoption of the report of the Committee of the Whole. Mr. Gregorio, please open the machine, and members, please proceed to vote. Representative Williams, how do you vote?
No.
Representative Williams votes no. Representative Neville, how do you vote?
No.
Representative Neville votes no. Representative Jackson, how do you vote?
Yes.
Representative Jackson votes yes. Representative Judah, how do you vote?
Yes.
Representative Judah votes yes. Representative McLaughlin, how do you vote?
Yes.
Representative McLaughlin votes yes. Please close the machine. With 41 aye votes, 24 no votes, and 0 excused, the report of the Committee of the Whole is adopted. Majority Leader Escar.
Thank you, Mr. Speaker. I move to lay over the balance of the calendar till tomorrow, Wednesday, May 26th.
Seeing no objection, the balance of the calendar will be laid over until Wednesday, May 26th. That brings us to announcements and introductions. Representative Weissman.
Thank you, Mr. Speaker. A couple Judiciary Committee announcements. Today, we are in the Old State Library. We will hear one bill, Senate Bill 88. House Bill 1320 is being reset on the calendar until a future time. We will not hear 1320 today. Also, tomorrow we will follow the printed calendar, plus we are adding House Bill 1309. That will be at the end of the order. We will get going in the Old State Library in 15 minutes or 1:55 p.m. Please be there promptly. Thank you.
Representative Michelson-Jeannet.
Thank you, Mr. Speaker. Public and behavioral health. I'm going to give you 10 minutes. So if we could be down in the committee room at 150 in 112. That's 150, the time, in room 112.
Representative Exum.
Thank you, Mr. Speaker. House Transportation and Local Government, again this afternoon, in 15 minutes, we're going to hear House Bill 1322, Senate Bill 238, House Bill 1310, Senate Bill 76, and House Bill 1196. And for tomorrow, we are moving Senate Bill 262, Representative Byrd and McKean, to next Tuesday. Thank you.
Thank you, Representative Exum. Representative Montine.
Health and Insurance Committee, we've got a few changes on the calendar coming up tomorrow. So I just wanted to make sure everyone was aware. Tomorrow afternoon, we will hear Senate Bill 63, Senate Bill 9, and Senate Bill 16 in that order. And then we are going to have an Upon Adjournment Friday committee hearing. So yay for us. And on that, and in that hearing, we will be hearing Senate Bill 169, 255, and 194. Thank you.
See no further announcements and introductions. Majority Leader Escar.
Thank you, Mr. Speaker. I move the House stand in recess until later today.
Seeing no objection, the House will stand in recess until later today.